So I was just
Sorry about
introducing
that.
you, but you can introduce yourself better than me. So if you want to maybe tell a little bit about ALM or whatever you want to do, just so folks know who you are, and then we'll start talking about some of these topics that we were talking about earlier.
Probably the most relevant thing at this time is that I was in the audience in October of 1979 when Paul Volcker announced that he declared war on inflation. And it happened at the American Bankers Association annual convention in New Orleans. And I was in the audience, and I was to follow him. I was speaking after him at the same convention. So I'm old enough to have been there. And I was dazzled when the 1,000 bankers in attendance stood up following his speech and announced that, and basically just, they were just excited, thrilled that he was going to declare war on inflation. My speech that followed his was basically to advise a number of the bankers there that not be attending next year's convention because they would not survive what was about to happen to them. And
Then you were, at that time, you were the chairman of American Bankers Association at that time, right?
well, I was on the American Bankers Association Commercial Lending Committee, and I had just finished developing the theory of asset liability management, which basically involved designing a theory to a methodology to immunize or inoculate a financial institution from interest rate changes. Now, I think that at that time, banks primarily made fixed rate loans, and there weren't any floating rate loans, and so I mean interest rates following his speech in the 80s, we went up to over 20% on the prime. I remember selling federal funds at 40% overnight, uh, and that was kind of tough for savings and loans that had mortgages on their books at 5%. I mean, if you're earning 5 and paying 40 or paying 20, you've got to do that in big volume. You know, you got to make it up in volumes. I don't know. Basically, that dog won't hunt if you're lending money. So it was a problem. And uh, so my theory was designed for that. Now, I think that has direct implications today because they think interest rates are going to they're using interest rates as the primary vehicle to shut this economy down or to slow it down or to end inflation. The fact is that most institutions and most borrowers that are in debt, that are on floating rate and have triple digit IQs, have used some hedges in that to hedge that off. They're better able to deal with rising short term rates now than they ever have been. The problem is that my theory was developed to deal with the income statement and the earnings. I did not, I did not address, I limited the theory. I did not address the portfolios. Now, today, I believe that everyone is able to handle the rise in, not everyone, but most major institutions have more rate sensitive assets than liabilities. And as interest rates go up, they make more money. The thing they can't deal with is their bond portfolio depreciation rises dramatically. And in fact, today, I think that the Fed actually saw, uh, uh, the problems when the G20 met and in March, in February, I'm sorry, in September, on September 30th,
Right. Hey,
they
Jim.
themselves had huge depreciation in their own investment portfolio.
Yeah,
And that's
one of
where
the
the
things.
problem lies.
Yeah, one of the things that
Having trouble hearing you.
okay. I'm going to go on to a different.
Are you there, Bob? Bob, I'm saying your mic is off. Well, until Bob comes back, I guess I'll just talk a little bit. But the depreciation, the Fed itself on September 30th had depreciation, unrealized depreciation in their own investment portfolio of US government, US Treasury securities, and mortgage backs had unrealized depreciation of over $1 trillion. That represented about a 13% depreciation in their entire portfolio. Now, $1 trillion represented, bizarrely, it represented 27% of their equity capital. Now, if you even care about the equity capital that the Federal Reserve has, over $1 trillion in depreciation gave them, that equaled 27 times their equity capital. Now, I can guarantee you, if any bank out there in the United States had depreciation of 27% of their equity capital, they'd be closed long ago. Now, we're not going to close the Federal Reserve. They have the ability to print money. Now, the ability to print money is a wonderful thing to have. And it sure enables you to do things you otherwise wouldn't do. So that makes a big difference.
So Jim, if everybody can hear me, okay? I was having some trouble. Just raise
Now
it.
I can. Now we can hear you again, Bob.
Okay, good. Yeah, something.
I just went on to a treatise about the depreciation in the Fed's portfolio to fill in the void we're gone.
I appreciate that. I was listening a little bit there. That's a subject that you and I talked about in the past, and we've talked about the difference between the part of the portfolio that is not marked to the market and the part that is. And you had some interesting thoughts on that last time we talked. Just that this depreciation we're talking about is in the portfolio side, correct? Not in the. Explain that, because I'm trying to go back.
For the Fed's accounting is different.
No, I was talking about the banks, though, on the bank
side.
But
I didn't, while you were gone, I didn't talk about the individual banks. But basically, I have data that shows for about 700 banks where the average, actually the FDIC data showed that the average bank in the United States as of September 30 on their call data showed had unrealized depreciation equal to about 27% of their equity portfolios. That was the average of the 4,000 some odd saving institutions that they oversee. So that was 27%. That was the average. Now, there are some where that was greater than that and some that was less. But 27% of the equity portfolio suddenly, and those are banks. Now, I guarantee you, some greedy hedge fund guys and some greedy private equity guys, that their depreciation in their investment portfolios, the unrealized depreciation, far exceeds that. Now, banking, a bank is supposed to identify when it buys securities. It's supposed to put them into one of three buckets. I love to use buckets. One bucket is a trading bucket. Now, those securities in the trading bucket need to be marked to market every day. And they're certainly marked to market once a month. And those are marked to market trading account securities in a bank are marked to market, and the mark is taken through the income statement. So it will affect the reported income of a bank. A second alternative, and I was surprised, I've been out of the business for some time, But I was surprised to learn that most of the banks over the last 10 or 15 years have, when they're buying and selling securities, mortgage backs, municipal bonds, US treasuries, US agencies, whatever, most of them have been put them into this other bucket called available for sale. Now, available for sale securities have to be marked to market monthly, but that mark is taken directly through the equity account and not used through the income statement. And it is taken in as a comprehensive, other comprehensive income or other comprehensive loss, and it exists there. And then the third category is you buy securities for the permanent investment portfolio, and those are just never marked. They're not marked during the day. They're not marked monthly. They're not marked. They just sit there until those securities are bought, and they're supposed to be held until they mature, and therefore they're not marked down. Now, come September, a lot of people wanted to move their securities from available to sale bucket to the permanent portfolio bucket for obvious reasons. But I do believe that the Federal Reserve saw, and not only here in the United States, but they saw in Europe the problems. That was the G20 meeting occurred at the same time that England, the Bank of England, ran into trouble with their gilt bond auction, and the gilt bonds were falling like rocks in price to the point where the pension funds over there were going kaput because they borrowed a bunch of money.
Hey, Jim, as you know, I've been talking about we're one bad auction away from disaster. I think that was kind of the comment that I made that connected us on the channel, on the YouTube channel.
You are absolutely right, and that is the essence of the article that I just published on Seeking Alpha, called the United States Treasury
You know what? I'll
faces
try to post
financing
that.
crisis.
I'll
And
post that link to that article that you wrote, and you can find Jim on Seeking. But just go in there and put in Dr. Jim V. Baker, and it'll come up. And it's an interesting article. And in fact,
but
with
you're
Jim
the one
Palmer,
that Bob. You're the one that triggered me. I really didn't. Everyone talks about the size of the debt. God, we're going bankrupt. How can we afford that? And et cetera, et cetera. I never looked at that. I don't
well,
care about that as much as I'm a cash flow nut. If
but
you
you know,
borrow money from me, I'll lend you cash, and then when it comes to, I want cash back. Uh,
yeah,
and
what's funny is we've been triggering each other since we met because that was the trigger for you. And then when I read that article that you wrote, I think 2 or 3 articles ago, I just looked at it and go, why in the fuck didn't I figure that out? You know,
Yeah,
how,
but I'll tell you what, I just finished this article. It was published on Christmas Eve.
yeah,
My family wasn't
I saw that. I saw
my family was not happy with me that I'm in here on Christmas Eve busting my ass writing this article, and they said, "What are you doing? Where's your value judgments in that?" I said, "I don't know. The world be saved right now." Uh,
I
and
love it.
the crazy thing is that when I had no idea the dimensions of it, so I start. Since we originally talked about it, over the last month, I've been nibbling at it and working at it, and hundreds of hours put into it. And when I added up all the numbers, I said, "Wow,
Well,
wow."
hey, listen, this
I
is
said,
why I wanted to,
Houston, we got a problem.
this is why I wanted to do this, Jim, is that some of our conversation, I just thought it'd be really interesting to discuss and hear some of this stuff because the thing that when I said, why didn't I figure it out was the depreciation. Okay, interest rates are going up, and I totally missed the whole concept that this was destroying the balance sheets of these banks and why they wanted to move these assets around. And hopefully folks that are listening right now are understanding some of this, that the implications to the banking system, you made it clear, and I agree with you, that banks are more able to deal with these dislocations of capital and sharp rises in rates. In 1979, I worked in a room in Chicago where we were calling guys like you, trying to convince them at the time to hedge up their portfolios. And we got bankers hanging up on us going, dude, we're not going to risk our assets in our bank speculating in futures. And we're like, no, 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 you are risking them. We're going to get you out of that business. And that was the beginnings of, really a different phase in the banking system at that time. And I think that's what got us to today, as far as I'm concerned, and
It,
moving us
it,
forward.
in my opinion, in my opinion, the damage that was done in this modern monetary theory coming out of Japan. I've got to talk about Japan. My book was published in Japan. The Japanese bankers used to come over to my office. The big banks would come over to my office. They'd come over to the United States and they'd visit with Chase and J.P. Morgan in New York City. And then they'd fly and stop in to visit me in Oklahoma City. And then they'd go out to the West Coast to visit with Bank of America. And I learned to give a lecture to them in Japanese. I said, Enbo suru ginko ke hajime mashite doso yoroshiku. And they just about went crazy. They said, God, he can speak Japanese. And basically it says, I meet you for the first time. Please beat the shit out of me. Dozo yoroshiku. And
Well,
but anyways, at that time, they were their interest rates were all fixed, and the United States was convincing them that they needed to float their interest rates. They needed to let their interest rates rise. And I told them, I said, look, don't listen to these goddamn people in the United States. You got a good deal there, son. Just keep them fixed. Because if you let those interest rates rise, let me tell you, you're going to have a big problem. And of course they did. And their economy hasn't been heard from since.
yep.
In a positive way. They just, by allowing their interest rates to float, they really, they really lost the big thing. And then, so we told them that, and then they're among the ones, besides Princeton and MIT and Japan, that they give us modern monetary theory. Well, the
Boy,
damage done in those 4 years is irreversible, in my opinion.
that's a rabbit trail. If we go down, we'll be here for about 8 hours to even
Well,
touch on that. I'm gonna, I just feel like one of the things I was thinking about is if we we've already, like you said, we're too far. It's irreversible now in what we've already done. Yet at what's going on here, and now they just spent what, 1.7 trillion. They like that number, don't they? That 1.7. That's the number they like. That was the one they did what, in January, over a year ago, when they did the first infrastructure. Wasn't that 1.7, and now they just threw out another 1.7. And Mitch McConnell's telling us what a great deal this is.
The budget, the official budget that was presented by the president and the Office of Management and Budget, which I used in the article because that's what they did. The budget projects a deficit for fiscal 2023, which ends September 30th. It projects a fiscal deficit of $1.154 trillion. Now, that is as close to the tooth fairy as you can get, because it is in that budget. They assume the interest rates on Treasury bills are going to be 90 basis points. That's less than 1. It's not even close. And so we're back to your original concern, Bob, that you expressed to me months ago. That we're one auction away, we're one failed auction away from disaster. Well,
Yep.
we're getting to the point where I am wondering who the hell is going to show up to buy all the debt when it comes up. Now,
because we know the Japanese are the Chinese are net sellers right now.
And we know the Fed is itself
And
rolling off securities.
Yeah, exactly. So
now,
who's buying?
In my article, I have in there Bing Crosby singing "Bye Bye Bonds, Bye Bye Bonds," you know, from the World War II Liberty Bond Drive. Maybe
Right.
Bing will come back. You know, Bob Hope
Well,
and Bing, maybe they can sell the
well,
bonds.
well, listen, folks, I hope you're enjoying the conversation because uh, I've told Jim when I grow up, I want to be just like him. He's my idol, and that I could see me doing that Christmas Eve when I'm 82, writing an article or doing something. Some of you have commented on Twitter like, "Okay, Bob, I thought you were on vacation." You know, I'm on vacation from my daily duties. I'm never on vacation from my love and the things that need to be said. Like Jim said, the world needs knowledge, and I love these Twitterses. I'm hoping that I can put some really fun things together. I'm hoping to get some other folks to come on, but I've got Jim and I are like two peas in a pod in a lot of ways because we have the same passion for all this stuff, and it's nice to. I always joke with everybody. I'm a young 70 and Jim's a young 82, and I want to be just I want to be just like him. That 82, I still have the passion in doing this stuff. So, you know, and a lot of I think Jim, you can comment on this. A lot of what our passion is to help people that be able to guide themselves, you know, and protect their assets and all that. I was not as famous as you in ALM and asset liability management, but if you Google advance and protect, that is a theory that I developed along with our software, and you'll see a bunch of advisory firms come up. Those are all people that even were or have learned that term from me, and it was really about really the whole capital preservation is the key to everything. If you don't have money to invest, then you're kind of screwed on this stuff. And so I'm trying to find a way, Jim, just to segue before markets get too long in the tooth. I think I wanted to. I mentioned in my tweet that we'd also be talking about the markets.
Absolutely.
Uh,
Let's. Uh, this isn't just theory.
uh,
The one advantage for you and me, you're young pup at 72, but the advantage to me in 82 is I've been there. Hell, I
yeah,
played in that game.
you know what? You know
Everyone's
what?
talking
Once
about, well, this is like 2018. This is like 2012.
no, it's not.
No, no, no. How about 1973? How about
Yeah,
1974? How about
yeah,
the 70s? What were they
yep.
like? Uh, the I recall I calling banks trying to sell them bonds at 15.5%, and they said, "Why?" And the one bank I called was Bill Jennings. It was chairman of the board, CEO of Penn Square Bank, that caused huge bank failures all over the nation,
You know what?
Continental Illinois, Seattle First, etc.
Hey
Uh,
Jim,
yeah,
that's the exact story I was going to say. If you folks don't know the Penn Square story, that's one of my favorite stories that you've told me. So I'm glad that that came up because I was going to guide you to that. So
well,
let's do this one real quick. Let's um, a, a Penn Square story. I want to talk just spend about 10 minutes or so just kind of going through markets, where they're set up, and at the close talking about this week, and then we can do some interaction there, and then maybe come back to some of these other things. We'll see what kind of folks are getting. Yeah, somebody commented on the Twitter says LOL when you speak Japanese. That was pretty good. I didn't. You are a master. I no way can I keep up with you, man. You're special. I'll tell
well,
you. I told you
you
that
want me to
before.
tell the Penn Square story?
Yeah, I do. You got to do it.
All right, Penn Square. Bill Jennings was the owner, CEO, basically the owner, CEO, president of Penn Square Bank. And he and I were executive vice presidents together at a previous bank. He went on to buy Penn Square Bank. I went on to form what is now known as the Baker Group, which is a nationwide investment banking firm that is quite well known and doing very well. And so one time I called Beep. His nickname was Beep. I said, Beep, this is got to buy these government securities. I said, I've got a sale on them here today, son. And they're 15.5%, and they're due in 5 years. It's a new record. It's slightly lower than what Lee paid just before Appomattox. And He said, Bake, why in the hell would I want to buy bonds from you at 15.5% when I could lend? Prime rate at this time was 20%. He said, why would I want to buy those bonds from you at 15.5% when I could make loans all day long at prime plus 5 and earn 25%? I said, well, Bake, that's a good question, but let me tell you the answer. The answer is you're going to be accruing those loans and that interest 25%. And you know what? You're not going to collect the goddamn interest, and you ain't going to collect the loan because they're all going to go bye-bye. And on this 15.5% government securities, you're going to get the interest and you're going to get the maturity, and then you're going to thank me. He said, well, Jim, I just can't do it. Well, hell, within several months, his bank failed and took down Continental Illinois, Seattle First, and about 40 other banks in Oklahoma. And I said, okay, that's the way it is. So that's my Penn Square story.
So yeah, I story, and if I was, I'll try to find a couple things. I wish I was more proficient here. I'm trying to pay attention. It'd be nice to if look up that Penn Square Bank story because it did take down sector banks, a big deal. I mean,
Well, the
a
best
really
deal
big
is
deal.
get my friend Phil Zweig, a great writer and reporter for the Wall Street Journal, wrote an award-winning book. It was called Belly Up, and it was actually printed in my offices. And I told him, Phil, I'll let you print it here and I'll visit with you, but by God, don't mention my name in that book or you'll destroy my business. So the whole story is Belly Up. The book is by Phil Zweig, and I'm sure you can get it on Abe Books or eBay. And Phil, very knowledgeable guy.
How do you spell Phil's name?
Zweig. Phil Zweig.
I'm gonna ask because I'm probably
Belly Up says it all.
sounds like you got to get that one. Yeah, so yeah, I had to hear that. You to tell that story, and then when we come back, well, I have a similar bond story. It wasn't as good as the Penn Square, but it's a quick one. I had a very wealthy client in 1980. It was a similar bond sale. It was 15, and they were 16 and a quarter bonds. They were 20-year bonds. They were on a fire sale for $92. They were printing, actually they're 16 and a quarter, like 16 and a half, 16 and three quarter yield maturity. They had a call at 20 years, and I told this guy that he needs to take he had inherited a lot of money, and his family, there's a company named Jacuzzi you might have heard of. He was part of that family. And I told him, I tried to get him to put every dime he could into those bonds. And I explained to him, he goes, well, what if the bonds go down? I lose money. I explained to him what would have to happen for him to lose money at 16 and a quarter. And I said, by the time you were losing, the long bond would be, this is a 30-year bond, by the way, with a 20-year call. I said the long bond would be above 20%, and there would be no economy, and the whole thing would collapse, and interest rates would be to some number you never imagined, and those bonds would be worth $150, $200 a piece. Plus, you'd be getting 15, and I think it was a 15 and three quarter was the actual coupon on this thing. I said the bad news is that first day, 20 years from now, that they can call those bonds, they're going to bring them back in. You're only going to get 20, you're never going to get 30. And the moral of the story is he never did it. And those bonds printed, I think, 187 at one stage. So they doubled in price, but they paid 15 and three quarters for all those years for 20 years. And the peak, I think the peak value was around there because then you start to get the yield maturity and the value start to change. But the yield never changed. Just the long Jim's story, different, same outcome if they would have been either of us, and we would have been, they would have been really good. This guy had multi-millions, close to 10 to invest, and it would have made, oh my gosh. I told him, I said, you never have to get a mortgage. You want a new house? You just borrow against your bonds. You get 90% on your bonds. While you're getting paid 15 and three quarters, that you'll offset any broker loan rate at the time because it was just going down. So anyway, it's an interesting story.
That would have been a nice ticket to write too, Bob.
Oh man, I'm telling you.
that would have made the month.
I tried. I was selling hard. You have no idea. I was pushing that ticket out there hard. So but so okay, folks, let's do a couple minutes. I've got a couple things. Last night, I put out a tweet right before I went. I was up till 2 a.m. I'm working on a project. Yeah, so that's the similarity between me and Jim is we're both crazy people and we're working on projects. So um, I think I got up pretty early this morning too. So my wife's like, "What time did you come to bed?" I was like, "I was after 2, I think." So, but I put a tweet last night on the hourly chart, and it looked like around 7 a.m. Eastern time, the market was going to roll, and we're going to the setup perfect, and we did get the roll at that time, and we traded down. My projections was I posted out there the the market grid, and the original projection was S1. I said we could print an S2. We came just short of S2. I think we printed. Actually, I think it was right on 30, 38, 38 was the number. 38, 37, 25 was the low on the future. So it printed right down there. And just for the record, the algos are suggesting we're probably going to stabilize a little bit into the close, and the aftermarket looks like we have a chance at maybe printing up just a little bit here. But what I wanted to really kind of touch on, because I haven't had a chance to talk to everybody.
Well, based on that, I'm going to put in a buy order right now. I'll tell you that.
Yeah, you know what? That worked out pretty good the last time we talked, didn't it?
It did.
So Jim and I were talking, and I said something about I just put it on something, and he's like, "I'm putting on those damn things too." It's pretty funny. So anyway, there's a limitation, but the dailies I mentioned that I thought that the daily charts could actually start to improve a little bit. It looks like today, maybe tomorrow. We got a short here, right? So we're going into a Friday holiday market again, but it looks like they want to try to print this thing up into next week, and there's a cluster of moving averages above where we're trading right now. We're looking at 3906, and then somebody asked me on Twitter, so if you're listening, I'll answer you live here, what the significance of 3934 was that I need.
That was the ding.
Yep, and yep, there you go. And so the significance was that's really the 40-day moving average, and I need us to get above that, which is similar to the 10-week moving average. So we need to get back above these averages to get the markets to stabilize. But I've been criticized because I've been saying that we're just in this choppy range. Well, all we've done again is trade down to the bottom end of this range around into the low 38. So we're 41.38 is the range right now. And so it looks to me that we're going to like firm that up. So as we come into year end, I think when we see these sell-offs like we saw last night, because they were printing almost 39, they printed 39.50 as a high, and there's just still a lot of sellers out there. And it's just when you have a crappy year like this, and you come into year end, you're just going to have a lot of tax selling and stuff, just kind of wave after wave. That seems to be what we're talking about. Before I took off a week and a half ago, I was saying that it looks like the last couple of weeks of the year are going to be negative, at least printing down into some of these numbers, and we've done that. So the expectations from here is that we should start to firm up over the next couple of days, maybe get a little rally and test these averages. But listen, these numbers there is a cluster, and as 3906, 3956, 3934, 3968, that is the ceiling right now. We break above that, and there's a screaming rally right there if we get that. We haven't, but right now the algos are suggesting that we could get that. I'm going to go over to the weekly because I know I'm not going to have. I'm going to be traveling, heading back to Arizona here in just a couple of days. But the same scenario on the weeklies, there basically says we can't get out of purgatory here. So there is a limitation of probably around this 3972, 3980 up in that range. So watch out for that range. I'm not sure we're going to be able to get that for a little bit here because there's just a lot going on, and you have to ask yourself at some stage, like, what would be the trigger? And the answer is there isn't one. It's one of those where we're just looking at locked in this trading range, but the patterns that just tie in together. Just a really quick synopsis of what I'm looking at. I put out there last night. The database is interesting. I was talking to one of our long-term institutional customers has been with me 20 years. Hard to believe. He goes, "Can you believe I've been with you guys for 20 years?" I go, "No," but it has been. And um, the what we were talking about is the database is very similar. So if you look at the posts that I made on Twitter, if you're a WaveTech user, you look at it, the daily is like 37, 31, and the weekly is 40, I said 37, 47, 31, and 47 and change on the weekly as well. And you should know from watching the channel that 42% is all that means is there's a adequate enough stocks that are trending that typically will act as support in the underlying markets, because too many people have drawn trend lines on S&P charts and think they know what the market's going to do. And underlying, why I always post this, because we're watching about 16,000 symbols at one stage. So that percentage bullish means a lot when it comes to expectations of the underlying bids in the markets and the trends. It's the most rudimentary view of that would be folks going X amount above a 200-day moving average. Well, this is better than that. Things could be above a 200-day moving average, but be in a downtrend. The fact that it's above the 200 doesn't mean anything, actually. All it means that they're above the 200. But when you're looking at the database that I put out every day to you folks and show you, that's a different situation. It's not above some magical number. It's about having momentum and a whole lot of factors, about 600 rules in our database that drive all of this stuff. There's a lot of factors being looked at, and when you get to that 42%, I always guys that chart that is out there is what it's a leading indicator versus a lagging, because there's forward looking because of holding periods. I'm getting a little long in the tooth here on this, but that's the reason why it looks like maybe a right shoulder setting up. I have a weekly chart up in front of me, and we have the 200 week moving average 37.50. That would be an extremis pattern. I'm just looking at the market grid for weekly. Listen to this, S1 38.21. We printed 38.30 this morning. Maybe there's another print low. R1 39.18. This is weekly. Potential here's the 39.72 is R2. So I think we just stay range bound. Maybe we can catch a little bit of a bid. Santa fell off his sleigh coming into last week. So there's really nothing there. Now, there is one other thing, just to tie together what I told you folks the week I left, is that last week we needed to close lower. There was an outside reversal, and I'm gonna end here, and then Jim and I are going to talk about a few more things. But the close was 38.79, and we closed lower last week. So there's a key number to watch for, and that number is the high 39.19. If we get above that, that will negate the reversal as it stands right now. As long as we don't close or rally above and print above 39.19, we're good to go. Except we needed to continue this reversal pattern. We needed to trade below 37.88, which we have done yet. So we still have part of the week. So watch those two numbers: 37.8, 30.19. Those are your pivots. If we take out 19, then that negates the downside. If we take out the lower end at the 37.88, then that confirms further downside. But I think what I'm looking at here on the weekly algorithm and stuff, there's still a lot of chop. So we could probably hang out. We could print down toward that 200. Just so be cautious. I talked about a rally formulating over the next several days, if based on getting above that 39.34 level, which puts us up over some key levels. I'm not predicting it. I'm just saying that's what it would take to confirm this, and on a short-term basis. But the intermediates are still very neutral. So I just want to make sure. I know folks that have shown up wanted to hear about that stuff. So
Bob, I just want to thank you for that tip to buy. That ding you heard earlier, I'm going to get rid of that damn Ripple wine I've been drinking, and tonight I think I'll have some Dom Perignon on that trip.
There you go.
It's up 25 handles. The futures, NAS futures up 25 handles.
Wow. Yeah, I like it. Yeah. So anyway, folks, listen, I appreciate. I don't know. I think there's a way. I don't know how many people are here. So here's what we'll do. I see there is a request to just trying to. So if you're a little patient here, you know what? Maybe this is a good point. Maybe what were you in? Almost an hour into this space. Your time good, Jim?
Yeah,
You have a little
let them
time?
ask some questions if they have
Okay,
any
yeah, let's do that.
questions.
Let's do this. Ignacio, I'm going to bring you up here as a speaker. Just 1 second. If I can get it to work. Here we go. Okay, just turn your mic on. What's on your mind?
Hello, everybody. Thank you very much. My question is, the Federal Reserve printed too much money, and the future is Bitcoin. What do you think about that?
Not much. I'll tell you what, Ignacio, I own a Bitcoin. 5 Christmases ago, my son gave me a Bitcoin. And at the time, it was worth $700. And you know what? I've been bugging him ever since. Where in the hell is my Bitcoin? I can't get my hands on it to sell it. But no, Bitcoin probably has a place. It's not something that I certainly don't trade it. I've got 1 Bitcoin. My son won't give it to me though. He's gonna keep it.
You know, Ignacio, I guess from my viewpoint, I think it's very difficult. I think after SPF and FTX and all that crud that went on there, I think Bitcoin's probably going to emerge as, Bitcoin is, from what I understand, and people I've listened to that I feel like are knowledgeable, Bitcoin is really different than crypto, and it's probably the only legit coin out there as far as that goes. And I think after SPF, all of the folks in Congress and everything, they're trying to take the opportunity to try to regulate and do things, which is not necessarily a bad thing. I think if they had these exchanges regulated like they do securities exchanges, S wouldn't have got away with what he did. But as far as the future, I'm not the guy to ask that question, but I do think I agree with Jim. I think there's a future in place. Will it take over? Who knows? I mean, what they're going to, what's next up
I think it's more likely that there'll be an alternative currency to the dollar coming out of the BRIC nations.
Yeah.
As you know, the BRIC nations, most of them aren't huge fans of the United States, but BRIC stands for Brazil, Russia, India, China, and South Africa. Now, I don't know how South Africa got in there, but there are 9 other countries that have applied to be admitted to the BRIC group, and they are very interested in coming up with a currency to compete with the dollar. And they want their currency to be somehow backed by maybe a combination of oil and gold. And they have been accumulating massive amounts of gold. I've been working on an article on that, and they really do have increasing the supply of gold. Our gold reserves have remained at about 11,000 tons forever. It's fixed. It hasn't changed. But increasingly, the world is not happy with the price of things being set, especially important things like oil and that being set in dollars, because with the rally that we had in dollars up until G20, this G20 meeting, I don't know what they were discussing there, but big changes since then. And I mean, the DXY, the dollar was trading at 98 cents before that meeting, and I don't know where it is now. $1.07 is the euro now. It went from 98 to $1.07 since the G20, and basically, I think the other countries read the United States the Riot Act and says, look, with the dollar as strong as it is, hell, we can't we can't, and you want us to sanction oil and gas? You want us to freeze our asses off? And you want us to starve? Well, we don't have enough money to buy food and energy. So I think that, along with the depreciation in the central bank's portfolios around the world, was astronomical. I don't have a good handle. I'm trying to get the numbers on it, but I believe that the U.S. depreciation in the U.S. In the Federal Reserve portfolio, our central bank, pales by comparison to the depreciation at the Austria central bank or the German central bank, because those crazy suckers were buying 30-year bonds at 0% interest. Those bonds are now going the speed limit in the school zone. That means 20 cents on the dollar.
Yeah. So, Jim, we had this conversation and we're led to, we talked about this a few months ago. And one of the things that we came up with, folks, was the whole concept that if you got gold and oil, but primarily gold, you folks that watch your channel, I've been really talking about on gold that is trying to really, I mean, it's setting up really bullish. And I'm thinking, okay, what's going to happen here? I always talk about doing reverse fundamentals, where the technicals are saying something. So what could make that happen? And I'll take the rabbit hole Jim and I went down a couple months ago, was that that somebody's going to have to buy an awful lot of gold, because not only, he mentioned it, not only are there the BRICS, there's a whole bunch of BRICS wannabes out there, and they're all, if their currencies, and they're going to be backed by, somebody's got a lot of gold. And we know that Russia has a lot, we know that China has a lot, and all these, and of course South Africa has it all. Maybe that's why they're in there, Jim.
Well, and realistically, let me tell you what. Now, you asked me if I own Bitcoin. I told you I had the one, but I do own some gold and I own some silver, and it's kind of like a ballast on it. I don't need it for income, and that it's just in the event. It's insurance. It's like an insurance policy. I hope I don't need my insurance policy.
Yeah.
Certainly, what Bob is saying, and all of his work has been shown for the last couple of months, 2 or 3 months. Man, that sucker gold bottomed at about 1710 or something, and then
1620,
and then just went sideways. And they say the longer the base, the bigger the rise. And gold's made a hell of a move, and gold may be telegraphing the problems that are out. That precious metals may, in fact, be the canary. That something. Make no mistake about it. Something was about to break, or is about to break, or has broken, and the bodies just haven't floated to the surface yet.
But you know what? The only problem with that is that means Peter Schiff is right. And I don't think he's been right for 20 years. I guess.
No, that is a problem. That is a problem.
Sorry.
Him and Howard Ruff. Is Howard Ruff still alive?
I don't think so.
He may what damage he did.
Yeah. What was that? MCMR, something like that.
Oh man,
that group that they had back in the day. But
listen, you've got emerging problems. I mean, certainly things that have got my attention are like Blackstone gating their REIT fund, and Starwood gating their fund. I mean, the jig is up for those damn boys.
Yeah. Hey, listen.
The disaster that we saw, in residential back a few years ago. Now we ought to see that in commercial big time.
Exactly.
Difference is these commercial boys, that private equity group, and that is housed at the big banks.
Yeah, so
they're the big lenders on that commercial stuff. Trophy properties, they're called. And you go to New York City now, go to San Francisco, some of those trophy properties, you could fire a cannon on any floor and not hit anybody.
Yeah, so that's a whole interesting thing, because I think you're right about the commercial real estate. I read an article just the other day. I think something like, I'm going to say, I'm going to round it 40 to 60% of all the buildings in New York City are in. And it's getting scarier by the moment. My brother's in commercial lending, and he said, hell, it's worse than it was in '08 and 9. He said there was no market. And right now he's in multifamily. There's no way you can take the current cap rates in multifamily and make a loan of any sort that's going to cash flow for anybody, even with rents going up. It doesn't work, period. And so all of these guys, and it's an interesting conversation. I almost wanted to try to get him on. He's just getting over COVID. I wanted to get him on here because what's interesting is that um, what's happening with these guys that own multifamily, it's like trading baseball cards when collecting Roger Maris baseball cards when I was a kid anyway. You're a little bit older than me, but they there's no value. All these guys swap one multifamily for another one, and then refinance it. They pull money and then swap it, and this has been a game going on for 2 decades.
What is that
And even
called, Bob? Is that Section 135 or something?
Yeah, it's a Starker Churches, which is, yeah, I forget what they call it.
They just roll. They never pay any goddamn taxes.
They never pay any taxes.
They just keep it in real estate. I mean, when in my life in banking, the people in the real estate just never stopped until they blew up.
I knew there's a guy that started, Jim, with like 20 million, financed it, right? He's rolled that up to about $600 million now for the last 20 years.
He'll never cash out, but at some point he will go belly up.
Yeah, I mean, it's just rolling. And so right now, this is interesting because probably the commercial real estate area is the vulnerable for multitude. We could spend an hour and a half just unpacking that. But the main thing is that we're talking about more office buildings, not apartment buildings, more office building types. I mean, there's just nobody. This whole COVID thing just kind of disrupted people going into the office and all that kind of stuff. So, but what's happened is even on the multifamily, because of rates going up to where they have, the cap rates they just don't work. I wish I had my brother on because that's what he's done for 25 years. And the point I'm trying to make here is that there's no investment value in any of these properties right now. And then if we're to go too high, which I guess if we got into talking about rates, I still think the back end of the curve is going to be the pressure just because there's not demand there. Where the front end, I saw the Fed funds rate this morning was 4.33. I think there was a bill auction that went off this morning at 4.40. So they've got rates up there pretty good on the front end of the curve. But
stay on that point a minute because a lot of the big loans are tied. We used to have LIBOR, London Interbank Rate, and then they put everyone in jail or fined everybody because they said they were colluding. And now they got SOFR, Standard Overnight Secured Funding Rate. And that puppy just broke above 4, and it began the year at basically 0. All right. Now, 4% is a lot when you go from 0 to 4%. Especially when you planned on, as you talk about, Bob, they're planned on rate of 2% or 3% or something.
Yeah. So listen, we got someone else. I'm sorry, I'm sitting here talking. I'm not being a very good moderator here. Let me bring up Tommy. He has a question. So I'm bringing you up right now. Should be able to unmute and go. There you go.
Gentlemen.
Yes.
Thank you for doing this. Appreciate it. So I'm out here in California, Los Angeles area, but I've had the opportunity to travel, and I just came back from New York over Thanksgiving, and restaurants full, Broadway full, Macy Day Parade full. I'm out here in LA, and I go to my butcher, and prime rib, $30 a pound, and the owner tells me he sold out. So I'm talking to my brother-in-law who buys all the alcohol for Costco on the West Coast, tells me he can barely keep stuff on the shelves. So, but what I hear on TV, YouTube and all over, recession's coming, end of the world, gloom and doom. And when I'm out in public, I'm just not seeing the same thing. So what gives?
Yeah, hey, listen, I talked about this on one of my live streams I did on a Wednesday on a Fed day. I went down, I live up in the mountains in Arizona, so I went down to Phoenix,
Yeah,
to
I
Scottsdale,
remember that.
and every shopping center was full.
Yeah.
Just what you're describing. I went to a grocery store that's a high end, and I want to buy those $30 steaks because they were 33 bucks the last time I bought them for Prime. So I'm coming out your way. But, uh, but the bottom line is that this is a high end market that that all they have is like they have the best of everything. It's a small little market, but they're really high end. There was not one park. I went there a couple of weeks ago. Not one parking spot to get into. So I'm not necessarily in the recession camp. I'm not sure. Um, I don't know. I'm going to let Jim respond when I get done. But I'm not sure I'm in that. I think some of the things that we've talked about here today um, is that we're really, I guess, market and everybody's able to deal with a lot of these. I would call them, I don't know, destruction of what am I looking for here? The whole demand destruction isn't happening. Okay,
Well, you know
and
what?
and
One
I
of the reasons for that, Bob, I think, um, all the government out here in California, everybody who works for the government, you got a 10% raise or higher. If you're a police officer, you made out good. Firefighter, teacher, all government employees got paid off over the past few months. That's one of my theories.
Yeah, yeah. Well, and they just got a new. Jim was talking about bucket. They just got a new bucket out to be able to shell out another 1.7 to all their buddies and spread another layer. So yeah, and listen, our database is telling me that the intermediate database is turning around.
Yeah.
We get up to 62% on that puppy. I'm a screaming. You're going to hear a guy that's so stupid that everybody's going to tell me I'm wrong, so I'll know I'm right. Just like I was, just like in November of 2020, when everybody said you're crazy, can't be buying everything in sight. Our database went to over 84% bullish.
Well,
And what happened? It was oil, and it was basically anything to do with crude oil made money from November of 2020 until recently, the last quarter, and then financials were good in 21. There was great markets. I mean, we've got portfolios in our portfolio expert that are up 30 and 40% this year. All you had to do is go to the right stuff, and I've featured this stuff in on the channel off and on. But so Jim, what do you say?
Let me weigh in.
okay.
I
Yes,
think
please.
I think we're into a real bifurcated market, and there's certain areas that are just like you guys. I went to Costco, and in the food court, and hell, I thought they were gonna have to cart us out of there. So many carts bumping into each other, and it was just it was dangerous. And and as I was checking out, I was very observant when I go shopping, and I wanted to see how many carts had TVs in them, and how many had stereos in them, how many had big stuff. Most of the carts had food in it. Food. They weren't buying TVs. They weren't buying. If you didn't buy a TV during the goddamn pandemic, I mean, what is wrong with you? Now that you're back to work, you're buying a TV and a new stereo and that. So what we have, and then I have a lot of information on the boat business. Boat business. I happen to live on the intercoastal, and I watch these. I've lived on the intercoastal for 26 years, and when I originally bought here, I'd sit out on the dock, and I'd watch boats go by, and every once in a while, one would come back by with two engines on it. Well, hell, you go out there now, and you watch the boats come by. If they don't have four engines on it, they don't even have a lick on it. And those four engines just alone are $300,000. And so now we got just console boats for $1.5 million, and all these boats are coming by. Well, they finished the biggest boat show in the world, I think, in Fort Lauderdale, Florida. And it was a disaster. You start thinking about where people cut back. How many people need a center console boat with four 300 or 600 horsepower engines on the back of them for $1.5 million? Yeah. And on the insurance. That's just one example. Now, there are other examples like that are going away. Now, the people that are there's no question. We see this tremendous strength in the economy. The people that are toast, absolute toast, are the people that have not owned their homes for the past 5 years or so. So they haven't enjoyed. The average person, if they were to do their financial statement today, would have to significantly increase their net worth because of put down the value of your home versus put down your mortgage on the other side. Now, I've got a friend that's got a mortgage. I said, what the hell's your mortgage now? Because you've refinanced it so many times. I was advising him, I said, refinance and get the most money you can from those puppies. And he says he's at 2.5%. And I said, 2.5%. Now, his mortgage is for more than $100,000, but let me use his 100,000 as an example. That he has a liability of $100,000. He now has a home that's gone up in value a couple $100,000. His loan at 2.5%. Somebody owns that sucker. Now, maybe the Federal Reserve owns it. Maybe that PIMCO's fixed income fund owns it. Maybe your pension fund out in California owns it, was packaged up. Well, that sucker at 2.25% or 2.5%, it's going the goddamn speed limit. That means it's trading for 55 cents on the dollar. I said, if you could find that loan, I mean, you're showing a liability of 100,000 on your balance sheet, but hell, it's only 55,000. If you can find that loan, that person that owns that loan will be happy to sell it to you for 55,000. Then you'd really cut a fat hog. So the net worth of the homeowner has gone way up, and they're working and they got a job. The person that hasn't owned a home, that has had to rent, has been screwed. Here in South Florida, their rent has doubled in the last 3 years. They can't afford it. Hell, pretty soon they're going to be living in pup tents. The average person cannot afford the average home. So therefore, how many people are going to be building homes at this price? The mortgage business that Bob talked about, that end of the business, they're finishing out the homes now, but going forward at this rate, the people don't qualify and the homes don't get built.
Now, Jim, one of the things I've been talking about is if you want to get a house right now, go to the brand new homes and these big major dealers. I was on a website just the other day, 25 to 30% discounts off a brand new house no one's ever lived in there. You can walk in the door and they probably got some mortgage company to give you some kind of a little haircut so you don't get the full rate. But you can get houses right now at discount. Much better than buying. If you go to existing homes, there are a lot of prices dropping there. I did something interesting. I went to Realtor.com and I did multiple cities and charted all these houses. And if you saw my inbox of my notifications, it's one price decrease after another, after another, after another. But the biggest discounts are in new houses. So if you're out there looking at new houses, you can go to Pulte, just go to these people's website and you'll see the discounts. If they have inventory, they're glad to give them. They want to get them off the books as fast as they can. And so that's probably the only place where there's a really good, and typically the big builders have money lined up the best you can to get numbers out there, where they've got discounts on origination points or some kind of discount on rates or stuff like that.
I think it's sector specific, and I think that that's important. Like that Bob looks at the sectors and figures out the relative strength in the sectors, and that's going to make a huge difference. It isn't. You're not going to be able to just like the guy on the betting. The guy buy everything, it's going up. Just buy and go, it's going up. No, you're going to have to be selective. Because some of this stuff is going to zero. Make no mistake about it. It's going to. And some of it's going to the moon.
Tommy, appreciate you coming on and asking the question.
Thanks, Bob and Jim. Appreciate it.
Yeah, no, listen, Jim and I've had a lot of these conversations, and I'm so glad almost everything we talked about for the last couple months is coming up right now. So I'm super thrilled we're doing this. So what I'm going to do is we've got somebody. We got a couple hands raised. Let's see if we can get maybe not give them a long. I'm going to bring in Alden, and so you should be able to unmute there, and there you go.
Oh, hey, gentlemen, I got a quick question for you. So I think Bob, you mentioned earlier, you gave an example of that. I believe it was it a 20-year bond at 15%?
Yeah.
Okay.
Yep.
So now, okay, right now you can pick up Ecopetrol. It's an energy company. It's in Colombia. It's a little bit risky. You get the political risk, but I mean, right now it's paying a 22% dividend yield. Is that something that you would maybe consider in a diversified portfolio?
Did you say Colombia?
Yeah.
Did you say the nation of Colombia?
Yeah, the South American country, Colombia. Yeah.
And they paying it in dollars, or they paying it in Colombian, whatever their
I
currency?
believe it's in dollars because they trade on the New York Stock Exchange or something. I'd have to check here, but BR trades.
Don't check any further. Don't check any further.
Okay. But I just
You want to buy? You can buy. If you want to, there's other stuff around in the United States that'll yield that too.
okay. No, that was just it kind of like spurred my just my memory because it pays a pretty decent dividend right now. Obviously, the political risk isn't it's not for everybody, but thought I'd just ask.
No, I think it's a good question. When I was on the trading, 1992, I was on the Pacific Options Exchange, and one of the guys, I think it was a Brazilian bonds or something, and I didn't get in on it. A whole bunch of these guys piled in. One of the largest traders on the floor that would actually own that fund that I worked for at the time that I traded for, and they went in and bought these things. And there was, at the time, I think they bought them like 20 cents on the dollar, and they made just a ton of money. So my comment would is obviously you don't go all in, you don't push all the chips, just look at the risk and if I'm sure there's a lot of things out there, especially around yields, because a lot of these bonds and stuff had their butts kicked, but now they've come back a lot because when the 10-year was trading at 440, that was your opportunity to get on the bond wagon and play that out. And now at 360, do you do that? I don't think so. There might be some downside, but the game was, if you can find stat and you can evaluate the financial risk and feel like, okay, this is worth a flyer. Like you said, there's political risk in Colombia. I don't know much about it.
You have a currency. You not only have the risk of the company, you have the risk of the currency. So
Absolutely.
You're dealing with two of the most volatile instruments in the world. You're dealing with oil, which is very volatile, and you're dealing with a currency, which is unbelievably volatile. If you want to really want to play in the big time, trade currencies. It will take your breath away.
Yes, it will.
It will take your breath away, and probably all of your money too.
I would agree with that. I traded a lot of currencies back in the early '80s, and that was the cowboy days. So those were amazing times. Thanks for your question, Nolan. Let's try to get through some of these here and see. Got. Is it Three Cars Monte? You should be able to unmute and ask your question. There you go.
Okay. Good evening, gentlemen. Here where I am, it's really late. It's in Europe. And I would like first to ask Bob, next time when you come to Europe, just travel further than Switzerland. In the Eastern Europe, it's so many things to see. Then one question. I mean,
Where are you in Europe?
Yes, in Eastern Europe.
Where?
Eastern Europe, Romania.
Romania.
Yeah.
I got family in Slovenia. I'm Slovenian.
Okay. You should try that one next time you come. Then I would like to ask you, because we are quite in the same age range. Do you see any sector that might be like not exploding, but being for the future, being very interesting, other than the classical, energy
Yeah,
and the staples and so on.
yeah. So, great question for that, because one of the projects that I got a side project on, I had a lot of plans when I got to where I'm at, but we didn't get the internet installed for a few days after I got here, and then there were other family obligations and stuff. But one of the projects that I'm working on is trying to research whether or not there is real merit to the whole theory of onshoring and companies where economies are going to embrace the deglobalization. I wrote
Okay.
an article back in 2017, I think it was I felt we were going to see a deglobalization. Some of it had to do with the Trump era and things were in there because it looked to me like there was a pretty good movement at that time. And then it halted, and then we got COVID, and then we got all this stuff that we're dealing with right now. But it's interesting because Biden administration never admit, but they're basically still doing Trumpism, only with some wokeism on the back end of it. So what I mean by that, they're still talking about onshoring. I drove by the new chip plant in North on my way to the airport before on the way coming down, and it's funny because chips are underwater. You couldn't get chips, now there's too many of them, and they're building more chip factories everywhere. So anything the government gets involved with typically is the wrong place to be. You'd be off betting with Kathy Woods than them. But what I'm working on is trying to see some areas, and I'm trying to remember. I think it was Carl Icahn. I saw him speaking not too long. It's you know long ago, but he was talking about something where he did some investments in a aluminum can, I think. And there's a whole bunch of industries out there that people don't invest in normally. And we already know there hasn't been in the U.S. here, there hasn't been a new refinery for I don't know how many years. But there's other industries, if they're going to onshore, I'm trying to figure out where is the most likely. So this is out to the community if you're listening to this. And I'll be
Mhm.
back on YouTube. But if you if there's companies that or sectors that think that this is the most likely place to do the onshoring, I think it's not really a sector, but it is, I think,
The
an
theme.
area
It's
of interest.
thematic.
It's a
Thematic, Bob.
thematic. It's absolutely thematic. And you know,
Can it be? Do you think that it can become a sector at one
I
point?
it's possible. I mean, they managed to get this ESG as a sector, right? Basically,
Yep. Yep.
which has been a joke. Uh,
Okay.
but I think I've been thinking about this on the channel time to time that this is something I'm looking at, and listen,
I think
we
that's
have,
one of the Bob. That's one of the reasons why you get caterpillars setting new highs every day.
yeah,
You know,
absolutely.
heavy equipment to build. You have people have to build these places, and that you're exactly right. And that is the repercussions of the deglobalization are just huge.
Yeah,
And
absolutely.
and we are in a position. Just imagine this, that we are possibly under the right leadership uh, in a position to reestablish the United States as a major global manufacturing place,
Yeah.
primarily because the one thing we have that other countries do not have is we can be self-sustaining on energy. Now, if you're
Yes.
building anything,
Oh,
by God,
Dr. James, sorry. I would not like to go political on this one.
this is
I
not,
would,
no, I'm
no,
not talking politics.
I was just trying to find out if you guys figured out something that could be the new revolutionary find out or something.
And
I
I
mean,
think
if
that's
you're thinking about that.
yeah. I think that's the only thing I've got three cards is that looking at onshoring, trying to find unique industries that even can grow or emerge, actually, is what you're really
Hmm.
asking.
Hmm.
And you just have to, try to be alert and looking for that stuff. And I know a lot of you folks, some of you could be on here that known me for decades, but I've always been good at figuring out these thematic ideas, and and but you have to be careful, because if you remember the whole infrastructure thing a couple of years ago, like they're going to build all this infrastructure and all this money's going to, there was no money in it. That it was, so we have to make sure that the private sector is driving the narrative, not the
Of
government
course,
trying to
of
invest
course,
money.
of course, of course, of
Yes,
course. Although everybody is trying to pull money from the governments because it's the easiest way to make money. But
absolutely.
that's another story. That's another
It
story.
is.
No,
It is.
I was just thinking if because me every day I'm thinking what could be the next, I don't know, the next Apple or the next Tesla or the next whatever. You
Right.
know.
No, I think that, you know, from my viewpoint and what, the typical sectors, I've been pretty good. We made a shit ton of money on the airlines in the pandemic. I mean,
Okay. Yep.
we returned 100% in 5 months on the airline stocks, and it
I
wasn't
remember
really
that vividly because you told everyone to buy when Buffett was selling. You said, "Oh man, this is a
absolutely.
gift," and that's when
I
all
listen.
people bought. Well, your
I got
people bought.
Yeah, I had a buddy in London that told me the rumor on this back street was that Buffett tried to get a special deal in bonds, like he always does, because he's kind of a whore, and he's
Yeah.
out there and trying to get a special deal. And you mentioned there's one of the guys, Treasury Secretary, told him to go pound sand. And so he was going to show them he was going to sell all the stocks. That was it. I remembered my video. It was how to take advantage of Warren Buffett's mistake. And I had all the Warren Buffett people out there going, "Oh, he's wrong. Warren Buffett's the greatest thing ever." And we made 100% on those stocks, just running our models on them. I said, just here's the ones to buy. And I had, I think, 10 or 12. I still have that portfolio out there. And so they're, for me, just three cards where I look at is just trying to find some kind of thematic idea or something like that. We've got about 35 or 40 thematic portfolios that we built privately. One of the things I'm going to be doing when I come back, I'm working really hard right now and revamping the entire YouTube channel. I'm going to go back to produce videos. I'm going to do some lives, but not every night like I've been. I'm going to get them down to very compacted. But one of the things too.
I'm there for you, Bob. I'm a long time follower.
Yeah, no, I appreciate it. It's been an interesting road for me on YouTube.
I know.
I know Jim because of YouTube. I've got other folks that I know all over this planet, like yourself. I appreciate. I love
Mhm.
hearing I love hearing you guys' voices. Right? It's like, and I'm always impressed because Jim can speak Japanese. I can't speak. I can speak English and English. And then I get like you, three cards. You obviously speak wonderful English. And I'm always very, very jealous of that. I'm a typical American, thank God
Yeah,
that
that's
almost
okay.
everybody
That's okay.
speaks English. I was in Switzerland. I was up in Lugano most of the time. I have a very close friend there, and so was spending time with him, and we were hanging out. So I got used to hearing Italian. Then I went down to Zurich, and they started speaking Swiss German. I had no idea what they were saying to me. I couldn't
Yeah.
pick up any of the words. So
Trust me. If you speak German in Zurich, you would not understand what they are saying. So
exactly, I know that. That's
that's
why
not German. Yeah,
I know. That's why I call it Swiss German, right? That's because
yeah,
it's not. So
correct,
anyway,
correct.
listen. Yeah. So those are things. I guess where I was going at is one of the things I like doing is finding unique maybe ETFs and just shredding them. And I go in and I
Hmm.
research them
Hmm.
and do these ETF hacks. And I plan on having a fair amount of that going on in this next year because we did something easy. It was the easiest trade back a year ago in January. We went to XLE and I hacked out a bunch of those stocks that traded in our models really well. And we made good money on those things. But it was the easiest trades in the world. It wasn't even, I wouldn't even call any insight. It was just the obvious trade that actually worked. And so there'll be some things like that, but I appreciate the question. So we
Yeah.
got a couple more requests. I really
Yes,
appreciate it.
sure,
Thanks for
sure.
thanks
I
for watching.
appreciate taking my call. Thank you.
Yeah, no, absolutely. Welcome.
Thank you.
Yep. Okay, Gino, you're up. You should be able to unmute, Gino, down at the bottom.
Yeah, but it just takes time for it to cycle through.
Oh, that's
So yeah,
okay.
it takes
No
just a
problem.
few minutes for it to reconnect because it just basically takes you offline and brings you back online in some weird way. So it just takes time for it to come up. So enjoyed
No problem.
the conversation. Enjoyed both of you very much. Dr. James, maybe it's time for you to put in a YouTube channel somewhere. I couldn't find you on a YouTube channel.
No.
Do come
I
back.
don't have one, but I don't have one. But for Christmas, my kids gave me a microphone and a new camera.
Oh Lord, you're coming.
And I said, but I'd rather just team up with Bob, the dynamic duo.
Well, it makes.
You know what's funny is that's what I was going to say, Gino, is that I told Jim we want to do some stuff on YouTube. Or reason one, we're probably not. We'll figure it out because we team up really good. We're very similar. I mean, we play off each other and Trigger. I mean,
Yeah,
when he goes into
yeah, you play off each other very well and sort of poke each other in the ribs just enough to get a good response.
we're being nice. We're keeping all the language pretty clean here today. So
Oh, you're
we
as
have a
bad as
great
me.
time.
I have people who poke around and go, "You're so sweet and so kind, and you do whatever," and then somebody pokes me the wrong way, and it's like, "Oh, Jesus, you can really swear." Yeah, in several
Yeah,
languages too.
I'm only one, but I can keep up with them.
Anyway, I enjoy the conversation very much, and what you're doing. I have several kind of questions. One, it sort of matches the question that the last gentleman asked, which is, where's a good place to go and not just hide but make money at the same time? And I like what you did with the airlines because when stuff is, I guess the best description of my investment style is a vulture sitting on lines waiting for the carcass to go walking
Yep.
past and then jump. And you can make a lot of money in any market in that sort of field as long as you're sure that the carcass can survive.
Yeah, and those are tough. We had an old saying on the floor is never screw around with stocks with problems. There's too many good ones.
Oh yeah.
So
But find the good ones that everybody hates for whatever reason.
yeah, no, I mean, yeah, absolutely. It's like you said, as long as they've got a pretty pulse and they're crawling along the bottom for a while.
Yeah, we used to.
That.
Yeah, I used to watch the NYSE floor and other floors, and I used to do hand signals to the floor traders to go and buy and sell, and
Oh yeah,
that was always a lot of
our
fun.
guy.
Yeah, because
I love that.
you could sit down and see, somebody was dumping a stock for some reason, and there was no reason for it, and I used to reward brokers who would phone me and basically yell at me that I should be on the other side.
That's awesome because I used to work for this hedge fund down on the Pacific Options Exchange, and there was a stock. It was a takeover stock, and the stock was trading $3 below the takeover price, and 2 months to go, I think, to the and I figured out a trade, and I went up because we had to negotiate because we were all individual. There were 12 of us running about $400 million in a hedge fund that were traders on the floor, and there were some upstairs guys. But there was a guy showed up every day, and he was with me. And he'd come in, and he'd sell 2,000 puts every day. He'd walk in, you'd see him coming. Here he's coming every time. And I remember he did this for like 3 days in a row. And I went up to one of the guys that was our basically ran all of us monkeys down on the floor. And he said, I told him, I said, Herbie, I'm telling you, this guy shows up every day. I've looked at this deal. I can put this stuff on in size, buy the stock, sell the call. I can put the whole trade on, and there's no risk. I said, we can't even lose a quarter of a buck here. It's like the worst case, maybe we lose an eighth. And he looked at it, and I remember the next day I came off the floor. I go, he showed up again. We got to put this trade on. So we started getting on that other side of that thing, big way. And I negotiated a lot of money. We made a ton of money. The most that we could make was, I think, 275 on the trade. But guess what? There was no downside. It was one of the best trades ever. Just like you're saying, sometimes those things, I don't know what you guys call them up where you were at. We just call them dues. You just do it. You don't ask why.
Yeah.
You just do it.
Yeah, I have brokers in different places now who made the same way. It's like they know what I'm looking for. They know what I want. When they find they do all the work and then they just phone me up and say, do this. It's like, okay.
Yep.
And I've been in ridiculous situations where, I'm lying on a beach, I'm having in Hawaii, I'm having a little flower drink, and, the phone goes off and some guy says, do this. How big? Gives me a number. Yep, go do it. And would look at me and roll her eyes and say, you know nothing about it. You did no work on it. I don't even want to know what the size. And she'd storm off. She'd storm off and walk off in a huff. And one time the guy sitting next to us looks and goes, "What's she so upset about?" Said, "I just paid for the vacation. No more. Maybe we'll buy a place in Maui, but I don't know." So now she's annoyed. And go, "Well, why is she annoyed if it gets paid for?" Said, "Because she told me not to answer the phone while we were away."
There you go. So you can
So
hang out with Baker and me. So
anyway, the questions. I guess the questions are, where, if not so much a sector as where do you look for some sort of, well, first safety, second income, second, really good investment, or third really good investment in what's coming, which looks like, from what you're saying, there's a bifurcated economy that's going to be a mess on one side and really good on the other side.
yeah,
And
yeah,
it's like it's the most screwed up. And listening to the two of you, I'm sitting there going, they're finally talking my style, because that's what I see. I see, people with money out spending it, and the shops are full, the restaurants are full. I tried to take a date to a restaurant the other night, and it's like, this one's full, this one's full, this one's full, this one's. Wait, I got it, and they looked at me and said, "You got to make a reservation now." It's like, holy
yeah,
crap! I got a choice of McDonald's or make a reservation.
yeah,
Um, and you shake your head and just. And I live in Vancouver, and property values, when you're talking $100,000, I'm like, well, add extra zero on that at least
yeah,
for a minimum property, because property values are about 1.5 to 3 where I live.
Are you in
yeah.
Vancouver?
Yes, I am.
That's unbelievable up there. That's just
I love
crazy.
that city. I love it.
It's just crazy.
Well,
Unbelievable.
it's just, you shake your head, and people, I
It
commuted,
hasn't made any economic sense for what, 5, 10 years?
20 years, 30 years.
For the average individual. I mean, I got a couple of tennis buddies. They got shacks up there that are $2 million now or something.
Oh, have them contact me. I'll buy it.
Yeah, just unbelievable.
You hear
Yeah.
somebody sit down and say, I've got a shack. Where is it? They give you an address and go, "That's a terrible looking place. It's
Yeah.
absolutely god awful. God, you'll never get $1 million for that," or whatever. And they look all depressed. And
Let me
is saying,
given on that, or while we're on that, if you have seen it in Vancouver, now I want you to imagine you put you extrapolate Vancouver to the rest of the United States. Now it has been 10 years or at least 5 years where the average person could not qualify for a mortgage in Vancouver. They just couldn't. The numbers just won't work unless they bet on price appreciation. Extrapolate that to the United States, and what do you end up with? You end up with you end up with people. The idea, the American dream of homeownership is becoming a very distant thing. Although they're going to have to make some, so we're going to become more and more a society of renters. I think, because they can't qualify for the mortgages. Now, I do expect that the mortgage loans, which are now 30 years, what the hell? Make them 50 years. But the difference between 30 years and 50 years, I ran the numbers on $1 million house, and it was only a difference of, assuming they put down 25% or something, it was only a difference of 10% for the month. It wouldn't move the needle as far as qualification that much.
Well, it's worse here because they put a stipulation in qualification that you have to qualify at at 5.25 or 2 points more than your current mortgage. So when you're getting a mortgage for 5% here, you got to qualify at 7% or 7.5% now in order to buy it. Just to so it's put a real downward pressure. But I run those numbers all the time, and it's not just the numbers, but when people sit down and say, your normal employee, your normal person can't qualify for it, that's not what happens. What happens is multi-generational families. So you have people who have a house, and then the parents, they take a loan out on their house, and they loan the money to the kids. The kids buy the house, and so that keeps the values up quite a bit. But right now, so one point in the outlying districts, you've got houses falling to, some cases, 300,000. below where it was before, but people always somehow seem to be able to pull it out of the woodwork. Now the number of sales has gone down, but at the same time, the property owners just say, well, why am I going to sell? So nobody lists. So the inventory has
Right.
gone down at the same time.
Yep.
The prices kind of stabilize. They're falling, they're going down, but it still sort of stabilizes.
Yeah,
And
I don't think we can't lose sight of the fact that the like my children, they're going to inherit a lot of money. There's a generation coming that's going to inherit a lot of money.
Yep.
They may not have the W-2, and that's of course they won't. They'll just have to pay cash for their stuff. They might not have jobs significant enough to where their W-2 will make them qualify under a Fannie Mae or something like that, but they'll have so damn much money they'll be able to do what they want to do. So that cannot be. I would not underestimate that.
Yeah, that's going to go on. That's going to go on for some time period. The problem is going to third generation losing the money because they don't know how to handle it.
Oh yeah, they'll burn. It'll be gone. It'll go up in smoke.
I just wish the educational system was more like Europe, where they educate people on actually how to sit down and maintain multi-generational money.
Yeah.
Which would be far more helpful. But off to my questions. When you're looking at onshoring, one of the things we're looking at is Mexico. I've got a Mexican lawyer here that we've been looking at the situation of what to do for onshoring. And I think that if you onshore into America, your labor cost alone is going to make stuff way too expensive, and that'll push up inflation. Canada,
Yep.
well, the rates are too high. Your employment costs are just so high that it's still not going to do it. But Mexico, I think a lot of it's going to go into Mexico, and Mexico is going to see them. Any comments on that idea?
Yeah, one before we go any further, Gino. I'd love to talk to you offline.
Sure. DM me. My DMs are open.
First of all, I love Mexico. Okay. I won the Mexican national championships a few years ago in my age group, and so I love Mexico. The deal on the deglobalization is you've hit on a very important point, and that is I believe that inflation will become systemic because of onshoring. Things are just going to have to cost more money because onshore, it's no longer all that movement across the world was to find the cheapest place. First, we went to Japan. Then after Japan, we went to China and then Korea. And now we're in Vietnam and Thailand, and we're running out of places. And now we realize that we screwed up because when it hits the fan, we can't get any products. And so I think that the movement to onshoring is a real deal. And I think that we could spend, Bob, we could spend a whole day just thematically bouncing off, and we wouldn't have all the ideas. The people in participating in this spaces would have ideas. I think that you're absolutely right. That will have a hell of an impact. But the one thing that benefits us onshoring that will maybe limit that price deal is that we've got so damn much energy here to fuel the plants and that, to grow the fertilizer, to manufacture the aluminum, the steel, and we've got so much natural gas, which is such a cheap source of energy. If they opened up all the natural gas wells, hell, we'd move in orbit. It'd just go poof. We'd be on orbit.
But now you're getting into the political argument, which
goes
all over the place.
No, this isn't political. This isn't political. There is no question. You need. You cannot manufacture aluminum with solar.
Oh, I'm not disputing anything you're saying at all.
This is not political. This is just saying what natural advantage does the United States have in deglobalization? The natural advantage we have.
The vastness of people, resources, and ingenuity to sit down and develop things, which has been
we have the resources that we do not have, like the minerals that we need for certain things. We do not have the minerals we need for batteries.
Well, the only one you're kind of short on is lithium, but there's still lots of lithium around. It just hasn't been tapped yet. Your oil fields are full of lithium, and there's a whole bunch of other stuff. Lateral drilling in subsurface extraction rather than pit extraction is very viable in several layers of lithium that are in the oil field. So there's lots of lithium. rare earth, not that rare. They're all over the U.S. Just people stopped mining them because China did it so cheaply. I've got several rather vast sizes of rare earths and uranium in northern Saskatchewan that we're working on for mining. So most of the materials, the only thing that, well, even copper, there's a huge amounts of copper that are available throughout North America. So I would challenge you to find one that you don't have enough of. There it exists. Just let's see, aluminum maybe, yeah, because there's bauxite
Cobalt,
limitations.
maybe cobalt.
Well, cobalt, there's some really nice cobalt mines that could be opened up and sat down and done, but nobody really wants to sit down and do it. And even if you started it and the price of cobalt went up, there's enough cobalt in Liberia, definitely enough in DRC.
A close friend of mine cut his bones in mining, and all he told me was, when we had this discussion that you're on right now, he says, you can't even begin to fathom how difficult mining is, and all of the all the permits and all of the
decades
stuff
to get anything.
You're talking years before you get anything out.
Yep, and
if you're lucky.
Oh yeah, now, this is what I do for a living, is sit on top and do the mining and do the stuff around the world and the exploration and the various stages of mining and the permits and all the rest of the stuff that goes into it. All of this stuff is available. It's just a matter of sitting down and doing it. We're currently working with a company that's doing a non-cyanide extraction for gold to open up some of the gold mines that have been closed down because they won't allow cyanide in it. So partly it's technology, partly it's a gamble, it's a risk. I mean, we just did a mine in Nevada, and the CEO of the company was pressing the mining engineer to sit down and speed up his development time frame. And we didn't quite hear in the bar when we were having drinks. A friend of mine that I took with me, basically, I always have a woman with me because their hearing and social skills are much better than mine. And she told me afterwards that there was something funny about what he said, but she didn't know how to interpret it. And we're sitting down watching it, and all of a sudden I get a report from a newspaper, a little local newspaper, that said there'd been a rockfall in the mine, and a third of the employees had been laid off. Somebody shorted the stock in 7, and there was still
Is this a gold mine in Nevada?
Silver.
Well, I had a gold mine in Nevada. I made my contribution to that. I've been down that mining route.
I actually own a gold mine.
Yeah, there's a whole there's a whole bunch of it
in Arizona.
I like Arizona for mining. It's pretty good. When you live it, there's a whole bunch of things that you do, but you realize that, like anything, you'll never know. You'll be humbled somewhere down the road. Never go all in, and actually send somebody down to actually walk through the mine and never believe the promotion that they're running on how good they're doing or how brilliant they are. You just until it's coming out, until they're actually in production.
I think we've talked enough about mining, Bob.
Yeah. So
okay.
Just
to get back to
go ahead.
Just for the second question about where to go, where can you put money that it's going to be safe? You get the back out return of capital, and then where to make money in the coming disruptions, particularly from the bifurcation of economy.
We both had bells going off same time, whoever that was.
That was me. Marcus closed.
Yeah, market just closed. Yeah. I don't know. So you have to understand, you're talking to a guy. My favorite line for many was, if it doesn't expire, I don't own it. So I've been such a derivatives trader for all my life. I'm not the great investor. I'm the great, not even trader, but more on an intermediate short term. So everything's got a hair trigger on it for me. So I'm probably the wrong guy to ask that question. Maybe Jim, maybe you have an answer.
No, I don't.
Okay.
All I do is I am continually running my radar and talking to people, listening, and to see if there's any ideas. I think it's very difficult by yourself if you are removed. You're not participating in Spaces or YouTube or anything else, and if you're just sitting there waiting for an inductive leap of a great idea, the chances that not many of those emerge in a lifetime, based on my experience, I've had an inductive leap about 4 times, and I think that's more than most people have. And those are great, but they just generally don't occur. You've got to link up, brainstorm with people that and it will help. And then what you need is like Charlie Munger and says, and Warren Buffett. God damn it! Do not dismiss how important luck is.
Yeah,
luck.
That was our battle call.
Man, and I don't know where luck is just there, and then you have to be able to recognize when you are at a fork in the road, and then you've got to pick the right fork. I've had friends that they've had many forks, and they are uniquely gifted in picking the wrong fork, and they end up to be street urchins. And other people are in the right spot at the right time and get to make a decision and go. Bingo. All of a sudden, and you're saying, how in the hell did that guy get all that money? He isn't that goddamn smart. Well, you don't have to be the smartest person in the world. But Jim, you got to be in the right spot at the right time. And then you've got to be able to make a decision. And in making that decision, you better have some money. You better have some money, some cash available. Don't rely at that time. Well, if that comes up, I'll go get the money. No. Have enough money to make it that said, count me in, I'm in. Here's my money.
So, Jim, can you hear me?
Yes.
Okay. What I was going to say is our motto on the floor was I'd rather be lucky than smart any day. So that kind of triggered me. I wanted to raise something, but the conversation was interesting on the mining and everything. But I'll tell you what, on the I want to go back mortgage thing just for a minute. Is if you want to know a country that's going to blow up, it's Australia. Their maximum mortgage, I believe, is 5 years. And I was talking to a buddy of mine down there the other day, and there is a ton of mortgages that have to roll over. Everybody has to refinance every 5 years. And I believe that's, we were just talking about that, I don't know, a month ago. And he goes, man, there is a ton of stuff going to hit, and everybody's going to be paying more. And just to kind of summarize this, we'll get another, let's see if I can, it's like Ryan has a question, bring him up here next. But I just think that there's so much. It's real estate. Real estate is a bad place to be at the moment, to a point, especially. And I think that's the bifurcation. And there's a lot of other places. I don't think we see we go all the way back to original question. I don't expect that we see the best way to put this. I see the big rollover. This is not 2008, 9. We don't have those scenarios. Jim and I've spent a lot of time talking about the banking system, and we talked about it today as far as being able to hedge up a lot of risk. There's the level of risk that is normally there is not there today on a systemic level. I don't think outside of something that like happened. We talked about a bad bond auction or something like that could derail the whole thing. Gill only bigger. That would be probably the only thing that I can do. So I'm going to bring Ryan up here. All yours, Ryan. Just on mute.
Yep. Hey, can you hear me now? Sorry about that.
Yeah, absolutely.
Excellent. So first off, just a fantastic conversation. Really appreciate all your insight, and gonna date myself a little bit here, but been around long enough to have experienced the Asian contagion and everything since. I guess my question, and Jim, you were kind of touching on this, right? Is being prepared for opportunity, and every one of those events over the last, we'll call it 30 years plus, there was always the elephant in the room, canary in the coal mine, use whatever analogy you like, right? At the end of the day, everybody felt like something was there, but nobody could really put their finger on it. And, if you had the foresight to prepare for it, you could really take advantage of, blood running down the street, right? So my question to your point, Jim, about being prepared, having the cash available, seeing the frick in the road, and being lucky is, I have been preparing and positioning for that moment, and I feel like that moment is coming in the next 6 to 12 months. But my reservation is this: I feel like too many people are in the same camp, and we can't all be right. I'm trying to find people to, I need that counter argument to suggest that it's not as ugly, or it's not going to get as ugly as many believe it's going to be. And are we missing something on the other side? So just curiosity, is there a confirmation bias going on out there? Any insight, any thoughts you gentlemen have around that? And appreciate you.
I absolutely agree with you what you're doing, and I like the idea. I am cash rich right now, son. I got so damn much cash, and it's sitting there, and the question is, when do you unleash it? Now, historically, when this happens, people unleash it too soon. But if you catch the wave, too soon is better than not being in on the wave. Does that make sense to you?
It does, and yeah.
And so trying to pick the absolute bottom is not the deal. But I am right now, and Bob is doing the same thing. I mean, I am right now making a list and checking it twice on stuff I want. Now I have some throwaway bids. I always have some throwaway bids in the market. I said, but hell, that buck will never hit that. I don't know if it will or not. But I've got good to cancel orders on some stuff that say, well, that's just embarrassing, Jim. It isn't embarrassing if you hit a liquidity crisis and someone somewhere just has to start puking their shares.
Flash crash. Yep.
Flash crash. And it's unbelievable when the flash crash hit. That good to cancel orders, the damn machine start bing, ding, 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 ding. God damn, what is going on?
Yep.
And I start looking and I say, holy hell, I own all that.
I was going to say something.
Gee whiz, I forgot I put the goddamn order in.
Hey, Jim, we used to call GTC orders good to close.
Well, so
my first close, they cancel them.
My first advice to you is that right now, I mean, and we're talking about marketable liquid stuff that you ought to be identifying. What do you want to own? Do you want to own Apple? Do you want to own Google? Do you want to own Amazon? What do you want to own Tesla? What do you want to own? And would you like to have a portfolio? If I told you, look, tomorrow I want you to come in here and give me a list of 10 stocks that you would like to own, that right now you're kicking yourself in your ass that you never did buy them when you had a chance. Well, there are some stocks out there now that you can do that with. Whether you want to do it or not is another matter. As Walt Deemer says, when the time comes to buy, you won't want to.
Yep.
Exactly.
But the GTC will be just get exit. Son of a bitch! I bought that damn stuff. And in that category, I mean, I might have in Baba. I might have Alibaba in there. Who knows what I might have in my good to cancel order?
That's kind of crazy.
And so that's the first step. That's the first step. The second step is to stay in touch with the movers and shakers, and hopefully you have a network where that's happening. Third is, by God, keep your eyes and ears open. Look at, listen to Spaces, listen to YouTube. People that say, well, that Twitter's a bunch of bullshit, that's no good. Well, they're fucking idiots. You can pick out some stuff. I'll tell you, I used to charge a fortune for my advice.
Yep.
And now I'm giving it away for nothing. That's stupid. But I've always been an educator. And I'm like, Bob's an educator. There are other people on Twitter that are educators. George Noble, Tommy Thornton, a whole bunch of people. And then there are some people that are just, they're just block the goddamn people, rid of them. IQ below 50 and that, hell on it.
Hey, Jim,
so don't give up. Don't give up. And
one of the things I wanted in here is something you said a while back, and I've been hanging on to it. So, but one of the things that you said, and having that network, I look at this community. I have a live room. Some of you have been in the live room. There's some amazing people in the live room that I've met, and we get an opportunity to do stuff. So I said this when I started the software company, and we started uh, going with institutions, and I always told everybody internally in the software company, I said the best ideas that we will ever have will come from us, but will come from the people that actually use the software. And that's exactly, I've got 23 years, actually 25 years, this is crazy, of the software and putting it out there. And that's exactly what has happened. And it's the same thing. I see this YouTube channel.
Yeah.
I met amazing people. So let's
Bob, let me
communicate.
say on that. It's amazing. Just imagine all of this stuff we're talking about, all this information, all this knowledge we're sharing is free. Hell, you'd have to go to conventions and spend thousands of dollars in registration fees and that, and to get people.
Hey, don't mess that up. I was supposed to talk about the conference I want to put on you.
Oh, well, that's different. See,
you're
now we're going to have a
cannibalizing.
conference. You're going to have to pay big money.
So, but yeah, listen, no, Ryan, I really appreciate, hopefully we answered your question. This is, I tell you, I've been on a lot of spaces. Jim has too. You know, a lot of them on their files and stuff like that. There's been some really good stuff out there. I actually have seen Jim hanging around some of the same spaces. I usually will bounce in and out, and I think I'm really happy how this turned out today, to be honest with everybody that's listening, because I've been wanting to have this conversation. There's going to be more where we bring in some other folks.
Yeah,
And,
thank you both. And like I said, fantastic conversation. And I'm going to be stalking you both going forward, looking for.
uh-oh.
So thank you.
Make sure you follow me. Follow me on Twitter and follow me on Seeking Alpha.
Yep, I'm there. Thank you.
Yeah. Hey, thank you, Ryan.
Bob, I'm going to step down to listening for a minute, but as far as your bank discussion was going, if you see Deer, his full name, come back in, bring him up and talk to him about the bank stuff you were talking about. He's a bank analyst,
Okay.
and that would make for a very interesting discussion.
But is he?
He's got a pair of deer
still on?
antlers and a deer head. No, he stepped off. I've asked him to come back, but he's in another space right now. But
Okay.
the discussion you were
I
having
think I've
with,
seen him around.
yeah, the discussion you were having with banking is just right down his line. It would have been like,
Oh, that would have been awesome.
that would have made for a fantastic.
Is he a bank? Is he a bank analyst or what is he?
Yes, he's an active bank analyst.
So hey, so I'm looking at your handle here. So I called you Gino. I don't know what you.
Oh, it's called Gnostic.
Gnostic. I see that now. I just saw it was abbreviated. I looked.
You're
like
Gnostic.
Gino, so.
Gnostic. So you spend a lot of time on Noble's site.
Yes, I do.
So
that's really
yeah. So if you can make a connection with us, I'd love to have him up. That would be awesome. That would be a lot of fun. I have time right now. When I get back to Arizona, my time gets sucked down because I have a lot of stuff going on. I have other things that are happening as well that require time. But I really so enjoyed that I did this. I got to thank Elon for giving me Starlink so I could sit here. Usually I'm like living in a cave here for 2 weeks when I come back.
Where are you, by the way?
I'm south. I'm on a ranch south of San Antonio. So kind of south, but southwest a little bit, up middle of nowhere pretty much. Like I said, when I started this morning, the power went out. There was one of the neighbors we called, and they said, yeah, there's 236 folks on whatever line it is that we got broken. Literally, I was putting batteries, getting everything up. I was going to run my routers and everything off of some batteries that we have backups here, and power came on. As I was plugging in the last cord, I just started laughing. I go, how funny is that this thing comes back on this very moment? So it was classic. So I'm glad that we've had the opportunity to pull this thing off today. So
yeah, no,
yes.
you're both right. I mean, the resources on spaces. I mean, you know, when I was trading in New York, we used to spend millions of dollars a month on advice from different people and bringing them in. And to see some of the people that come in here, you're just shaking your head, going, you know, and I hear people kind of poke at it and get nasty or do some funny stuff, and you just sit down and laugh and go, you know, you're getting advice from somebody. We used to pay him $10,000 for the day just to come in and talk for the morning,
Right.
and he's in here giving stuff away free, and a lot of people just what people miss is, you know, the floor used to train people to sit down and look. It gave people the sense of reality in the sense of what's there. And with the floor gone, the training process for younger people just isn't there. There's no way to
It's not
bring
there.
younger people
You're
in.
absolutely right.
And
Absolutely.
so they don't have that line gut feeling for trading that you build when you're working on the floor, just to sit down and say, I like this company, but something's wrong here. And you just get that gut feeling. And
Yeah.
and you know, you either you learn to survive on your gut and as
Yep.
much as your knowledge and everything else, and rely on other people around you to sit down and do it. And very much what's coming out on Twitter is there's other people, listen to other people. I mean, the knowledge, both of you have enough knowledge to sit down and give it to other people without a problem. And people should pay attention, because you can learn more on Twitter in less time than you could in a whole bunch of other places. So thank both of you for, you know, for doing what you're doing, and please do keep it up, and please do keep up the spaces.
Appreciate
Yeah.
it,
No,
Dustin.
no,
Appreciate
we
it.
really appreciate that. You know, I think, you know, like I was cheap because I charged 10,000 for 2 days. So I was doing something wrong, 'cause- based on what you just said. So, but
Dear just sent me a message saying he'll come back in a few minutes, so I'll stick
oh,
around
okay,
when he comes
awesome.
back, because I would
Okay.
love to hear. I'd love to hear your presentation of what's wrong with the banks and their asset stuff, and have the discussion with Dear. He's the younger generation that's come back to do the analysis, but he's just gone and some of the stuff he
Oh,
has
that's
to say.
awesome.
So
That's awesome. Yeah. Yeah. So, yeah, this space is, I thought, well, we'll do this for an hour or so. So, uh,
tearing into George, it'll last for 3 or 4 hours.
no
That's all
way,
right.
no way.
Yeah.
I don't have the time. I don't know how George does.
At least
Um,
thus far, we haven't. At least Gnostic. At least thus far, we haven't declared war on anybody else. You know.
yeah, I would make any comments about George, but it can get a loot over in that room. I don't
Oh
hang
yeah,
around
yep.
much in there. And, you know, listen, I can be as big as asshole as anyone, but, I don't carry myself that way. And,
Well, it's I just feel like I'm going to get cuffed up back of the head everywhere, like it was when I was trading, and
yeah,
it's like,
there you go.
but it's just like like old home day, you know.
Yeah,
Just
you know, thank God for those old mints that we had. You know, I lost most of them, that especially back in the Chicago Board of Trade guys from the 80s. That was they're all gone. But yeah, thank God for those guys, man. Just kick your ass. I was talking. My dad was a World War II vet, and man, I always say my dad hated bullshit, especially when it came from his son. So, you know, I couldn't get away with anything with that guy. He was straight up. He wasn't mean. He was just strict. He was like, okay, here's the consequences. Screw up. He was just that guy, you know, ex-military, all that stuff. And he just, yeah, I'm blessed to have had his, even when I was 17, I would argue that he was a real son of a bitch. And, but in hindsight, he did a lot of good for me.
oh, and
There's,
some of them were just, you know, they acted tough on the outside, but they were just softies on the inside. Like
oh
one of
yeah,
the guys,
yep.
one of the guys who would give me in the back of the head is, you know, we were, you know, dirt poor, broke, you know, trying to do stuff, and, you know, trying to run a business and make presentations, and didn't even have business cards. And he looked at us and, you know, dropped $1,000 bill on us and said, you know, go buy some business cards for God's sakes, and then come back and see me.
Yeah. Well, I tell you, I've said this before. I've got a group of like old people, floor traders and folks. That would be a fun conversation. Just get up there, just tell some of these old war stories, that there's a million of them, you know, and that would be. I, I've actually been contemplating starting this channel called the Rogue Advisor, and I got all the URLs for website and all that stuff. I've not done anything with it, but it would. I just want to just bring in and everybody be personality. I've actually got a meeting in Vegas with some guy. My very first manager that I had in 1980, still alive, and so he's in what is I think Ralph's 84. He's got a couple years on you, Jim. He's just going. He's just full of shit and vinegar, and it's just so fun. I mean, the stories, and you know, and I had reunited with him about a year ago, and I didn't think he'd even remember who the hell I was. He did. We actually crossed paths in a couple ways. So and after that, but I thought, man, there's no way he's going to remember me. I was a brand new broker, and I did break out pretty in the business. So But that anyway, yeah, that would be fun just to bring in stuff and the I know that what you're just saying is that this whole concept and idea that a lot of the younger people don't have that exposure that we had, and it's pretty special to have had that stuff. It's it's amazing.
Is there anybody else waiting to ask any questions, Bob?
Yeah. There's one more here, so let's bring up let's add FER, FER. Yeah, so Fur, you should be able to unmute your mic here in a second. I'm just cleaning up the speaker room just a little bit, folks, so don't take it personal.
Is he the only other person that has a question?
That's what it looks like at the moment. Yeah, there's a
Isn't
bunch
that
of.
amazing? We answered all the questions.
We're good, Jim. Come on, you already knew that. Now I'm just looking. I'm looking at the Twitter feed on this thing. Just see if there's anything out there. Yeah, just Tesla. Somebody brought up Tesla. It's funny. I was looking at it, and this thing is going to zero. It's at 109. Elon claims he's not selling it, but somebody's selling it. And they're a big seller out there.
Well, they're making the word on the street is that at 110, the people with the collateral have to start selling, and when they start calling the loan to be paid, you don't have the cash. Then they just start selling it, and they aren't as orderly in selling that shit as you would be.
So targets on Tesla. Talk Tesla just for a minute here. Is I have $69 and then 27. And I talked about this on the space I did the other day.
Now, are those the Fibonacci numbers, Bob?
Those are the Fibonacci targets on the downside. And I talked about this the other day, is that Tesla's the laggard. And I knew about 3 or 4 weeks ago, Kathy Wood came in and bought a ton of Tesla. And you knew that was the end right there when she's buying it. It broke through 200-week numbers. You got a weekly chart up here. It looks like the momentum on the downside just huge. I mean, there's just no turning around on this thing. As far as trying to come up with a price level, let me go to a daily.
Well, I'll tell you, the guy that's got to be hurting the most, and he will, he says it's just going to go to $1 zillion, is Ron Barron, whose Barron Partners apparently owns $1 trillion worth of Tesla.
I have, yeah.
That was on Twitter. Somebody posted what Barron Partners owned, and I ran the numbers, and it looked like $1 trillion worth.
Huh. So as far as it goes, I have this thing. You folks that are viewing on my channel, I always talk about the market grid and the STX buy signals. We've had in this last sequence, we've had 5 STX buys on a daily. So, and I'm looking at the algos. They're suggesting that we're probably going to hit a little bit of a consolidation here on a short-term basis. But everything, I mean, this is a monster downtrend. And the thing I said the other day on this is that Tesla is acting just like every other meme stock that was out there and one that got crushed. And what they typically do, and I don't know if Gnostic was, I have a lot of experience of trading penny stocks on the Vancouver exchange back east. That's why I was up there a lot. I have a connection there. But all of these stocks act the same. And I talked about this, and when the meme stocks were rolling over, I know multiple times in 21 when all this stuff was happening. Well, Tesla's acting just like the rest of them. It got overhyped, overvalued, and now it's trying to seek the value. When Tesla was worth every car company in the world combined, you knew something was wrong.
Bob, looking back at your charts, when did it clearly show a sell sign, sell signal, and say that's it? At what point do your chart?
Yeah. Let me just bring up models here real quick. Give me a second. And I'm gonna enable. Just got a couple more clicks, and I'll be able to answer your question.
I mean, the big shorts in the deal that have been patient shorts and big shorts.
Yeah.
Would be Jim Chanos has been a big short. George Noble's a big short, or has been, but primarily I think his was been puts. Tommy Thornton had been short, but
I think George, that's one of the few that I know George and I agree with. I actually think the whole EV market is the biggest scam on the planet. So we're talking about batteries they can't build them. It can't happen. And so you can't turn everything into electric cars. It's not going to happen. Everybody's going to have to ride buses or something. And then there's going to be a few cars because there's no way to do what they're talking about. And there's probably better ways, but I'm looking at.
And importantly, I want to say your statement has nothing to do with goddamn politics. The point is that you're just saying it's just stupid.
It is. It's completely stupid. And I know a lot of folks disagree. I'm not saying that it doesn't have place. I'm just saying it's not going to work out. And I think what the markets are telling you, it's stupid right now. And what I'm here is I'm enabling the shorts here on my model. So I just want to put this in here. And then so while we're talking, but yeah, and what the reason why, I mean, when I was in Switzerland, I spent 5 or 6 days at my buddy's got a Tesla, and we rode around it. I mean, it's fine. It was comfortable. It's not necessarily a nice car by any means, but it's but it was. We spent at least an hour and a half at charging stations over those 5 days, 20 minutes here and there, and they added up. So it was just a combination of things. It's like on a short sale, it came in the breakdown was signaled here at 205. It's almost $100 ago. And then the first target, which is one I mentioned, 137 was the first target. Fib target 2 is 69.46. And then 27.59 is the other, the Fib target 3. And what I talk a lot about, I mean, just the base where this thing came from is around, just trying to get a number, around somewhere between 70 and 60. And, the way this thing's trading, we could be there in a couple of days. But like I said,
that's good. But the point is that your methodological approach identified a short at 205, and since then, man, that's gone from 205 to here's to today's close of 109. It's gone there in what length of time? 2 weeks.
Let's see here. This is weekly 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks.
It has been almost
a coordinated. It took 11 weeks.
Yep.
Almost a coordinated sell event, which ends, I believe, tomorrow, because tomorrow is the last day for the tax loss harvesting. So I believe from that point tomorrow, we should see a bounce that should fall by Friday on the max pain of 120 to 140, if all goes well. And then next year, we'll continue to drop for the last leg, which I assume is when the recession will start. Leg should close around the 60s to 25, if it's a very deep recession.
Who's talking? Who now?
That's Fernando. I'm sorry, I just joined a bit later. My microphone was off.
That sounds. I would tend to agree with it. I wonder how many people on Robinhood decided, well, hell, let's short it now. It's going down, and those people get whipsawed, take it back to 130, and kick their ass.
Oh yeah.
Well, just for like I was saying is the algos are suggesting that we're probably going to get a short-term bounce here somewhere, and that makes sense with the final day of tax loss harvesting going on. Yes. So this is it, because we have a 3-day settlement.
This will be tomorrow. Tomorrow is the last day, and then Friday is the options expiry date where we have this max pain of 120, 140. But then, of course, we have next January concern. But for next January, we have quite balanced puts and calls. So it probably won't let Tesla drop much lower due to the amount of open option calls in the system. So it's quite balanced. So theoretically, the price should now stabilize for maybe a month or two until we get rid of this, until we reach that expiry date, and then we get into the next leg.
Sounds like I would tend to agree with that.
Yeah,
so makes sense to me. Makes sense to me.
Yeah.
Nothing goes straight down.
No,
unless it's just an absolute bankruptcy or something.
Exactly.
So this is interesting because the algorithms are saying today is the bottom tick today, and that then it looks like maybe a little down tick on Friday, but then
hell, maybe I ought to go into the after hours and buy me a little bit of that sucker.
Yeah, you got to watch when you're talking. He's got a short trigger, man. Got a hair trigger on that thing. So, did you have another question for it?
Yes. Well, my question was actually following the conversation we were having, actually with the previous questions, where should I allocate my money? So, since this is probably my recession. So first and then 2008. Yep. Now, well, then as well 2020. Of course, that was not a recession. That was an unexpected recession. Everything crashed, and of course, the Fed had to jump in with their tools and solve the problem, so the oligarchs can recover their cash, recover their losses.
I called that somebody just turned off the light switch for a couple minutes and they turned it back on.
So the Fed created an expansion phase, right? And I shared this screenshot, which was very favorable for tech, cyclicals, of course, oil and industrials. This was for the year 2020, 2021. Obviously,
I love that. I'm gonna steal that from you.
Yeah, then
that's good.
Of course, then came 22, where we need to pay the price, but now we can revert back all this expansion with a recession. First comes the inflation. So what works in inflation? Well, of course, energy, materials, value stocks, consumer, and staples. While tech and while all the other stocks that were working through the expansion phase start soaring, as we see now. This is the year 2022. Now, next year, which should be the recession year, 2023. Then we should see healthcare, utilities, packaged goods, and fast food, tobacco, all these companies which are the most necessities that society has. This will be the ones thriving, while everything else is catching up. So
yeah, that's pretty much a typical scenario in a recession, right? But I think this one's the bifurcation that we've been talking about. I think could present some challenges. Utilities are probably going to make a lot of money, not because of recession, because are you in Europe? Is that where you're at?
I am in Europe, yes.
Yeah. So, just from I think the utility companies typically they are interest rate sensitive, and like I said, I think that the back end of the curve is where it's all about from the standpoint of where the demand destruction. But I think it's going to be interesting.
In a recession, the interest rates start dropping, right? So we will expect to start seeing a decline on interest rates. But of course, the damage is already done.
Yeah. The back end of the curve has already dropped substantially. It went from 440 on the 10, and the 30 was a touch above that, all the way down, and we printed, down to almost 3%. And so that's a big percentage move. So you're probably going to see some stability in the rates. I'm not sure that's going to play out.
I'm certainly not convinced that interest rates are going to go down. I'm not convinced of it. I don't think. Yeah, and so I hadn't looked at in the recession. I mean, we're entering into this with tremendous need for money by the U.S. Treasury, and I don't know who in the hell is going to buy those bonds. And you go into a recession. Recession means they're going to need even more. The deficits are even going to be larger, just self-generating deficits. So they're going to even need more money to buy the bonds. So maybe the Fed comes in and buys them all, and that solves that problem. But if the Federal Reserve does that, I think it'll send a very clear signal to the market that inflation is here to stay and going to get worse. In which case,
you just need to follow the money, right? Follow the money.
In which case, the long bond could go to hell in a handbasket.
Yeah. So this year we've seen energy peaked, materials peaked, of course, with war and all the situation. Value stocks done very well, and right now we already see the transition from energy materials to healthcare. Healthcare is doing already very well. Utilities, packaged goods, fast food. McDonald's will do excellent in a recession environment. Tobacco is doing amazingly. It's green almost every day, while everything goes red and green.
Tobacco is a yield play, like utilities.
Of course, and alcohol, right? So these would be the bigger players within a recession environment, which we already see a transition. If you look which companies or which sectors are mostly green, where the money is rotating to, you can see that the money is rotating into these sectors already, because they already know next year we are entering a recession. So they are already positioning themselves cheap to next year to take advantage. My question is, once the recession kicks in, right, and then they need to make the transition from healthcare, utilities, packaged goods, fast food, tobacco and alcohol, where is the money going? Is it going again to an expansion phase, where the first ones to drop is big tech, right? We see Tesla, we will see Apple next year. Apple next year will be the last leg down that will bring everything to the real bottom. And from that phase, of course, healthcare will be doing great, and so on. And all these recession themes, they will do very well.
Bob, you're going to give him his major premise is we're going into recession. Earlier, you indicated your position is you don't really think we're going into a recession.
Not in a classical sense.
His whole deal is based on this recession and the way it's been in the past. Now, the recession in the 70s didn't unfold that way.
Yep. And
it was just 73, death. 74. It was just death.
Yeah. The market is already rotating into a recessionary position.
Very minimal though. For it has, because that what you just spoke of, and please just very conventional thinking. This is exactly the textbook on how we go to recession and the sectors you quoted. You're just going down that path, and that's fine. It may work out that way. I just looked at our models to see what we own, to kind of just to see what we're picking up from a quantitative viewpoint. And we have healthcare has been long for 34 days, expected to hold 188 days, so into next year. So there's a match there, right? Basic materials is long, expected to hold 107 days. So there's a second match for you. And one of the things that isn't, utilities look like shit. Okay, so that's the only one that's not playing, because I think there's a whole different scenario that's happening there. And I was in 360, because I never looked at the 10-year this morning. I just looked; it's in the 387 handle. So I think from the standpoint of what's going on, that's a pretty classic, and a lot of think like that. So that's kind of where folks are looking. Like the other sectors right now that we're long on, and they're not, let's see here. Healthcare is one, consumer non-cyclical, transportation.
Fast food, tobacco, alcohol, any?
I'm not breaking down by the group, just looking at broad sectors, but let me go to groups here and just see what we have. Excuse me. So, and that's fine. You just have to be careful. You just have to know you're part of the crowd. And those can be good trades sometimes. But I think there's some, I always say the markets are different scenarios. Like Jim was talking about earlier, you can't compare 2000 to 2008-9. You can't go back to 1987. Every big decline, every big recession, everything has different ones. They're similar but different, is what we say. Yeah. And so you have to figure out what part of that is going to be different, right? So tobacco, long tobacco, 29 days into 153 holding. What was your other ones?
So tobacco and alcohol.
Let's see what we have. What would that fall under? Beverages, right?
Yeah.
Beverages, non-alcoholic, beverages, alcohol. 39 days into a 242-day holding.
There we are.
So it's underwater about percent, right?
2%.
But it's long, so that's typical.
So we are within already the cycle of this sectors. My concern is the next cycle, and I believe that when recession starts, I mean, I understand that you don't think it will happen. I believe it will, considering, the Fed will destroy jobs, they will destroy economy in order to stop inflation. There's not many other tools that they can use in order to bring inflation down back to the 2%. So yes, maybe recession.
Which is, by the way, it's never going back to 2%.
Of course, they might
never
ease down the down target, but eventually that is at least the path that they are laying down for everyone.
Remember how you live in Europe, and think about what the ECB was telling everybody for years and years. When they go negative rates, if you want to own the wrong bonds, own something negative 1%, and look at where it is today, you get destroyed. What speed are those going, Jim? Like
Bob, 10? Are there any other questions? Anybody else have any other questions?
Yeah. Let's see what's out there.
We're beating this horse to the death, man. No. We've done enough on this.
Hey, Bert, thanks for your question, though. It's awesome. I appreciate it. So we got one other out here, so we'll go ahead and add big picture in here. So when you can, there you go.
Oh, hi.
Go ahead,
so I'm kind of new to this. Do you guys also follow fundamentals doing this analysis, or purely technical?
I'm primarily a fundamental analysis. He's heavy duty technical. I appreciate technical analysis very much. I'm one of the few academics that actually believes that technical analysis lens is important.
Yeah, just real quick, I do reverse fundamentals. I see the technicals and say what's going to make it happen, and so I do a lot of macro stuff and things that I think I can find out that are going to happen there. So I do, but I do it the opposite of everyone else. That's because I'm dyslexic. So that's another issue.
Yeah.
So I've been following some technical analysis, and the problem with predictions is the duration, right? So what time frame do you think an analysis is the appropriate time frame? Because if you go too long, I'm not quite sure if it can be quite predictive, and if you go too short, like minutes or something, there is a lot of noise. Right?
Well, the term technical analysis is so broad, and so what we do is a modeling, and so we actually have a history of every trade that we ever put on for the better part of 30 years, and but basically what's happening here is, like I was saying, like I'm looking at a sector here that we're long. It says 39 of 189 days. So I'm going to tell you that for the most part, markets unfold in weeks and months, not in days and weeks. So the short term has got a lot more noise in it. So intermediate, our average holding period in our models is about 240 days. So a little bit over a year. That's about 220 and change days in a trading year. Those are market days. And so I would tell you, for the most part, in technical analysis, is not drawing trend lines. That's what some people think, and looking at wedges and all of that kind of stuff. That's there's a little more to it than that to make quality good decisions for investing anyway. But that you're talking to a quant that has built models and used the same models. If you've watched my channel, I talk about our daily output, weekly and intermediate. We even have on our portfolio expert, we have secular trends we look at as well. And so some of those trends, we have trends that have lasted as much as 10 or 12 years. And they've been very, very accurate in holding some of those holding periods. But right now, a lot of that stuff is neutral, has been taken out in the last year. So there'll be a new cycle that comes in, and we'll start to see a multi-year potential cycle. At the moment, it's mostly negative. Long-term, intermediate is going to look good, and the short-term from the June October lows, we'll call it 2 points, were very, very profitable to trade off of the short term. So not sure that answered your question.
No, thank you.
Yeah, let me echo what Bob said. Bob's one of the few, in fact, he's the only person that I was able to identify who was generously sharing information on YouTube and Spaces that actually distinguished between short-term technicals, intermediate-term technicals, and long-term technicals. Most people don't do that, and so and each investor has their own time frame, and so based on your time frame, then you could do what you want to do. Like earlier today, he says it looks like it's bottoming, and I said, "Well, hell, I'm going to go buy." And so I bought. Now I'll probably kick it out tomorrow morning. I don't know. I need that Dom Perignon. I need that money. So that's what's unique about what Bob offers. Not only that, but it's the overall market, distinguished between short, intermediate, and long, individual stocks, and sectors. Sectors, intermediate, short, intermediate, and long, and then individual stocks. So you can drill down. I mean, and from that, as a former professor, I like that very clear, strong, consistent methodological approach, and it's very good. It's to start the day. To start the day without listening to his view of what's coming up is like starting the day kind of naked.
Thank you, Jim.
So this way, it gives you something to look forward to, and he's generally right. He's generally right. That's important. Some people have just elaborate technical stuff, and they get a lot of coverage, and damn, they're just wrong all the time. That's no good. So, anyways, I just wanted to say that, and I'm not being paid to say that.
Yeah, I agree. Technical analysis can be very tricky and misleading, and it can fool anyone. So, what do you guys think about trend following? There has been a lot of trend following this year in the news. Any thoughts on that? Or?
That's what I am. That's what we do.
Okay.
That's what our models do.
Awesome.
So we're by trade trend followers. So that's why when I talk about our database and it's 42 or 47% bullish, that means there's 47% of the entire database of 16,000 symbols are in trend phase, which is why we and what happens with our logic. So to explain, so if it's running on a short term, every day it looks at the data, looks at all the trends. There's actually 600 variables that run every day. I think we figured out that we do about 10 million calculations every night. Not that that makes it good. It's just what it does. And what it does is it's checking on every stock, every element of that stock to see, hey, is this one still in an uptrend? And it's our database is long only, so we don't do shorts because we deal with the institutional investment advisors, and they don't go short because their compliance departments would freak out. So we built it as a buy only, long only process. So the stock's even longer, it's out.
And it's heavily reliant on, correct me if I'm wrong, Bob, but heavily reliant, the basis of it is simple moving averages of various lengths, not exponential moving averages. Right. Is that correct or incorrect?
That is correct, but there's like the PPMs. Sir, do you watch my channel, or you regular one?
Myself, I'm kind of new to this.
No. Okay. Do you watch his program?
No.
I will watch. You need to watch. It's free.
Yeah. Yes.
You need to watch it. You will benefit from it greatly.
Yeah, I'm on break right now, so I actually won't be starting. The channel will light up again on, but there's old videos. You can go watch the videos that I did right before.
And you can get a feel. You can get a feel for it because it's the methodological approach is consistent from time to time. All this is the data and what's happening in the markets.
So here's my slogan: process over added an opinion, Attitude and opinions keep you in when you should be out and out when you should be in. And so that's why you have to have a process. And I preach this to all of our institutional, we now have retail customers use our product as well. And that's really what it's all about, because there's no way that you and I can watch all the factors and stocks, but the computer can't. And I remember once when we were programming years ago back in the 90s, and I made a comment to one of the guys he was writing up, isn't that an awful lot of work? He goes, it's a computer, it doesn't care. So
Yes.
that's
Bob, are there anybody else with other questions? Any other questions?
One last question from me for Dr. Baker. So what do you think about this Japan situation? Looks like they are doing a pivot, or I don't know, changing their policies or something, or I'm not quite explaining there.
Yeah, I mean, they've got yield. They went to yield curve control, and now they've adjusted their yield curve from minus 25 plus 25 to minus 50 plus 50. And while they were on that yield control, while they were on 25-25, their currency went to shit. And so they had to, expend massive amounts of money to support their currency, including they had to borrow money from swap lines at the U.S. Treasury to get dollars to buy in their currency. So with the pressures building, they just finally decided to change their yield curve control. My article in Seeking Alpha, current article published Christmas Eve, talks about yield curve control as one of the things that the Federal Reserve did back during World War II here. It didn't work. It worked for a while, but it's a policy. It's a result of their yield curve control. Hell, they own 80% of all the government securities in Japan, and I think they own, don't hold me to this, but it is a big percentage of their whole stock market.
Yeah, I think it's like
I'm going to say it's something like 50%. But they've done this before, and having lectured those people, Hajime Maste Doso Yoroshiku, having lectured those people before, I don't believe that we should follow them as the guiding light to policy.
So the other thing, Jim, you didn't mention is the massive selling of treasuries that they did to raise some of that capital as well to change that policy.
Yeah, they ran off in the last few months a couple 100 or 100 and some million of treasury securities.
I think it was $1.50 plus.
And why they did that, I don't know, unless the Fed said, okay, you can do that. But what they should have done was just repoed the goddamn securities to maturity to the Federal Reserve, and that wouldn't put any pressure on our market. But the Fed, I guess, decided to let them put the pressure on the market. I don't know if they actually, Bob believes they sold them. I don't know if they actually sold them or they let them run off by maturing bills. All right. I have no proof of one way or the other. All I know is they own a hell of a lot less now than they did a month ago.
Yeah, that's what I was going to say, well, however they did it, they don't own what they used to own. And
that's right. And
that's the key point.
They accumulated all these dollars. They accumulated over the years when they were the primary manufacturer and supplier for a lot of our products. Now, as they were displaced, as other countries start manufacturing our products, those countries start accumulated massive amounts of dollars, in particular China. Now we've got Vietnam and Malaysia, and those countries are now accumulating dollars because they sell more to us than we sell to them. So they have a balance of trade surplus, and they also have a balance of payment surplus. They have all these dollars building up. And the question is, what do they do with the dollars? Now, countries that don't like us, hell, if I was the Secretary of the Treasury for China, I don't think I'd buy a damn U.S. security. Russia once owned $165 billion worth of our Treasury securities. Last time I saw it several years ago, they were down to 12 billion. My question is, why did maybe they needed 12 billion for just traveling for their officials or something? But with the government of the United States sanctioning nations and putting liens on yachts and taking possession of homes and blocking currencies, I think that I wouldn't want to. If I was running the China Central Bank, I wouldn't own any Treasury securities. But they own about a trillion. They own about $1 trillion.
Yeah. So are you a bond bear or for going forward next 5 years or maybe 2 years?
That's a wrong question for me because I don't think the further. So here's a theory for you: the longer the prediction in the future, the more likely you'll be wrong. So it's real easy to do day to day, week to week, maybe quarter to quarter. You get beyond that, you're throwing darts. So there's not any possibility of guessing that. That's and this is another argument I have against a question like that is, so what if you knew what you do with it? You know, you can only trade what's in front of you, and there's so many factors in rotation, especially in the markets that we're in right now. They're so dynamic in that you don't know what's going to come out in the next 3 months or 4 months that could change the pricing, the structure, just like with the Japanese. Your question asking about their strategy change. Well, yeah, they were forced to do it. I mean, the Japanese yen was the dollar yen was at 185. They were, if that thing went much further, they were done. So
well, when they had at $100 up to 150 or 145, whatever it was, they have to import 100% of their oil, and they have to pay for it in dollars.
Exactly.
Inflation. If suddenly they're paying 45% more for their oil than they were before, the people in Japan are going to suffer. It's just like Europe now shutting off the gas and that from Russia, and then the price went through the roof. Jesus.
I guess we got to 149.71. But
wow.
The number that was sticking in my head is I had a fib target. I had 3 fib target at 148, 148.40, and then one at 150, 147. That's the one that stuck in my head. So we basically satisfied fib target 2, didn't get to 3, and we've been pretty much straight down. But there's a lot of support right here for the dollar.
That's a hell of a trade right there. If you went
long,
it really is. You went short yen against the dollar. You made a ton of money.
Yeah, and if at the top there, if you'd have bought the yen, it was a major play. So,
well, it's not only that, but at the same time, the dollar went to hell in a handbasket against the euro.
Yeah, I was.
You know, we got the euro now at $1.07.
99 cents. I was going to book tickets.
You'd have 7% there plus, Jesus, mercy.
All right. Well, listen, we got 3 hours under our belt. I think we're going to wind this down.
There are no other questions?
No, I think
that's good.
Thank you so much. This is great spaces. By the way, I noticed a lot of people may be requesting, but I noticed you probably haven't clicked on it for coming up.
I haven't. I'm looking now, and I'm just trying to see what hands are up. It says they have a little thing, whether it works or not, because I know there's been issues. Mm-hmm. But there's a thing that says it has at the bottom that it tells you how many requests there are, and I don't have any requests, and I was watching that little deal there. So anyway, thanks so much for asking questions and doing everything. Folks, I had no idea we'd get in this 3 hour. You know what? We're just lucky I didn't get Dr. George on here, because I have to go at least another hour. So we would have. We're going to have to plan in advance. That might be. We might be able to compete with Noble on that one. We get the 3 of us on here. We got 2 professors and me on there, which one of my mentors, we used to call him Professor, even though he never was. But I appreciate. Jim, I appreciate you taking it. It was awesome, man.
Well, we left a lot of things. We left a lot of things to discuss the next time. We really.
There's so much. I mean, I don't.
We're just scratching the surface. You know.
We really are.
I said, when I was traveling the country giving speeches and that, and I talked to this one guy, and he said, "Baker, you always get the highest marks in that." I said, "Why is that?" And I said, "Well, when I speak, they know they're just getting just a sample of what's there. And when you speak, they know they're getting the whole 9 yards." So we got a lot to give. We got a lot of.
We really do.
That's the advantage of being old. You've made so many mistakes, and you remember so many things.
I have to say this, Jim. I hope everybody from listening to this today know why I love you like I do, man. You're awesome. I've just had you're one of one of my jewels that I met from YouTube, and that we connected. I just feel very blessed. And
likewise, my friend. Likewise.
Yeah, and I just feel like you're right. We've touched the surface. We touched on a number of things that we've talked about in the past, and I don't know what I'm going to have to go for a walk out in one of these fields when we get done. I gotta burn this energy off because I'm still pretty hyped up. But
I got myself a glass of Pinot Noir right now.
Well, you know what? I might have to join in on that.
Okay.
There's one thing for sure. I did spaces once while drinking lots of wine. That's not necessarily a good plan.
No, I just picked mine up, Bob.
That's fine. Hey, listen, man. I appreciate it. I appreciate everybody that took out time and listen. I see we got one request. Do I dare?
Take it. But if it's not a question, if somebody wants to give a speech, that's no good.
Okay, Angela, you're up.
Hi guys, I'm glad you found me. So thank you. Really great space. I'll keep this really brief. So 2 questions. One, do you guys do options? Do you sell calls?
I do options. I do puts calls. I do options.
Okay, but
I'm a former market maker on the Pacific Options Exchange.
Okay. Oh, okay, great. So you do both puts and calls. I know that you don't. I did hear the message. You guys don't short due to the institutional.
That's not true. I
that's
short
just
also.
on the stock side. Yeah,
I shorted. I'm still short. I don't know if I've shorted Apple. I'm short Apple.
Okay.
So just so you know, it's impossible to get an ex-floor trader to buy an option. We're more than willing to sell an option. Maybe a straddle or a condors or all kinds of stuff like that. So nothing was ever easy for us, especially as market makers, a much different scenario and being involved in that. But so what's your question?
So are you more equity? Are you saying you're more equity trader?
Futures, 100%. We run about 15 billion in equities on our platform. So we definitely have a lot of equities, and most of the time in my live room covering the futures, not a lot of options.
Gotcha. Okay.
If I want to do a major market play, I will do futures. I will do either ES or a NAS. I don't do Dow, but I do those on the futures market with happen to do them with TD Ameritrade.
Okay, me too.
And but the puts and the calls, I generally don't do those on the overall market. I'll do those on individual stocks. I may sell a put. I may buy a put. I may sell a call. I may buy a call.
Okay, no, love it. So you guys do a bunch of different things. So I really look forward to learning more and more from you. Been doing this
right now, I happen to be my book. I am net short. It's just flat. And 6 months ago, I took down my book a whole bunch. I started playing with a lot less money because I didn't feel as strongly about anything.
Okay, I'm sitting on quite a bit of myself, so hoping I did the right thing.
And you know, there's a tendency to say, "Well, I got too much cash." No, if you get to that point, you count it and then you count it again. One of my favorite, the Christmas tree is still up, and then a very prominent position on the Christmas tree is Uncle Scrooge McDuck. And I always liked that sucker, the way he sat in the vault and threw the money up in the air and it came down and he played with it. So I'm kind of like that.
Okay, love it.
People ask me, so how do I double my money? Take that dollar bill and fold that sucker in half.
So my other question was in regards to the onshoring. So Bob, like you, I am also in the Scottsdale area. So I would love to meet for coffee or something one day. But so as we know, we've got the plants here developing in the Phoenix area with the semiconductors. I've been a long-term fan of NVIDIA, which I sold today. So wanted to get your thoughts on the whole onshoring. I look forward to any research that you do, because I'll look forward. I think that will be a movement for us that could be, a little bit groundbreaking. But you don't think it's in the semiconductors. Did I hear that correctly earlier?
I'm just saying that we couldn't find them, and now we got too many.
Okay, they
So
talked about that on CNBC today with the oversupply.
yeah, but that's been pretty obvious. The oversupply has been obvious pretty much all year.
Yep.
And I know I just actually while I was here, I just upgraded all my memory. It was very cheap in my laptop. I went from it had 8 gigs to 32, and I think it was like under $100.
Oh, geez. Yeah.
Uh,
It might be becoming a
so
commodity, right? And I think they're getting a hit on the gaming side as well.
yes, they are.
Not only gaming, but getting hit real big on the crypto side.
Bitcoin.
Okay. Yep.
The
That's
mining.
that's where the big play was on the NVIDIA was big on those those plays.
Yeah, if one of the guys that works for me, if Mason was here, he could tell you exactly the chip everybody was buying. They were putting them on eBay for 2 and 3 times their cost at one stage.
Yeah,
and I think
huge shortage in that. I have personally been in and out of Intel, and I was early in, very early in NVIDIA, but very early out. But I primarily got in there because my son was a gamer, and we were building a new computer for myself, and the best chip to do the job was NVIDIA. And I said, what the hell is that? And now I will tell you one thing, for what it's worth, and I haven't thought more about this than you just raised something that made me think about it. Some of the brightest students I ever had were Chinese students. God damn, were they smart. Mm-hmm. And I sometimes just wanted to sit down and let them laugh. Now, to think that we've got a monopoly on intelligence is just foolish. If they decide that they want to make fast chips, I think that they've got the talent. Hell, we train most of them at MIT and Harvard and everywhere else. They got the talent to do it. We're not going to be able to. I don't think we're going to be able to monopolize the world on semiconductors. That'll be a belief where we can do that.
Right. A lot of people are saying, oh, the chips are the new oil. So like I was looking at, ASML, right? So they've got the machinery. So I've been hearing that's what China is lacking.
Yeah, the machinery. Whoever makes those sucking machineries, the machines that make those chips, people aren't making those chips. Robots aren't they?
Well, I mean, it's a computer system. Yeah, technically a robot, right?
Yeah, but the individuals dream up the chips and the fastest circuits, and then they need the right materials to make them fast. And silver's better than gold's better than silver, but they find the quickest deal and that sort of. But anyway, that might be the way to play it. But I basically hate businesses, and for all my life I've done it. I hate businesses where every year the product gets 10 times better and is half the price it was last year.
Yeah. Turning into a commodity, right? It reminds me of Hewlett Packard, really.
Yeah, it's just like I remember CompuServe and CompuCorp and all of that. It reminds me also, like, I just hate the auto business. Why do I hate the auto business? I hate to sell a product that could be returned anytime in the next 10 or 15 years for a problem.
Yeah.
I don't know what my profit is. And when I sell a car, I don't know how much to put into contingent liability for recall. I know it's significant.
Interesting.
Now, they don't recall chips, but the fact that we sanction those suckers, we're not going to send you any more of our chips. You suckers are dead. You're going to have to go back to the abacus. There, take that. Bullshit.
No, good conversation. I need
Yeah.
to hear that because I've been the one saying, the chips are going to be the new oil, and that if we have the manufacturers, then we can, regardless of the chip spinoff and how cheap they get, we can still own the manufacturing of them, which to me would be the onshoring.
What we can do is by edict from Washington said anything you manufacture in the United States has to use U.S. chips.
Yes, and I think that they're underway with that, aren't they, in China?
Oh, well, it's just like anything you build here, you have to use U.S. steel. Any public service project, why not? That would be a part of the deglobalization, as part of the nurturing of your industry. It's just like, and the other countries will do the same. And Thomas Malthus will just roll over in his grave, and he says, "God damn, what has happened to those people?"
Yeah. So yeah, it's kind of interesting. Just tell you, I just brought up NVIDIA in our system just to look, and we do not have a position, but it does look there's kind of a right shoulder setting up here that maybe there's some move up. So as we're trashing the chips, that doesn't mean the stocks have been hammered pretty good. I mean, we're talking almost 350 to 125. Okay, so there's a trade in here on this thing. It's like, I think one of the guys that were up, Gnostic, was saying he's just looking for a carcass on the ground that still can live, and that would probably be, Nvidia is not going to probably go anywhere. Intel's probably not going to go anywhere, and Intel's been a real dog. But I have some folks that have built all my custom computers for quite a few years, and they were telling me that, and I just bought one of the new series of the Intel chips that are actually taking out AMD and speed. So Intel is trying to make a comeback. I don't know if Moore's law will exist any beyond this point, but it's certainly, we're going to need stuff. There's no doubt. So it could be the new oil, but if it is, I remember oil at $10 too. So
let me mention one other thing, and I recall it vividly. One of the big mistakes I made, that one time I heard Jim Cramer said, buy AMD. It's a duopoly. And it was at that time. And I think at that time he said that AMD was like $2 chuck. And when you look at it, we did have for a long number of years a duopoly. It was just AMD and Intuit. Now, then, only in the last several years has NVIDIA come on the scene. Now, with NVIDIA on the scene, you got 3 players, but it's not there aren't a lot of players because the cost of entry is got astronomical. The cost of building a plant to manufacture chips, the cleanliness that's needed, the machinery, the robotics that's needed. It's the upfront cost. Now, and I bought Intel recently, and then I sold it and bought it back. I sold it, and I was writing calls against it. And the one thing that attracted to me is that the government, the federal government, I think, and I think the state of Ohio was just giving them a lot of money. Just giving them a lot of money to build that $2 billion plant in Ohio somewhere.
Well, just got to find out if Pelosi bought any.
Yeah, I would.
Then we're good to go.
I would, and in fact, when I looked last time I looked at it, Intel was yielding 4%.
Yep.
And I think that 4%, when I looked at it, looked at the financials, it looked good to me. It looked secure to me. It looked like it could pay that.
Yeah, I
remember.
Felt like it's a sleeping dog, like it's an IBM that's just too big of a ship to move anytime fast with the competition. That
certainly has that reputation. But if you are a contrarian, and if you like the chips, then certainly that would be a leading candidate for you to think about.
Good point with the market.
I'd wait for WaveTech to buy myself. So I remember when AMD was trading at $12, we were on the trading floor 91, 92, and what would happen is it'd trade up to about $22, and Intel would sue AMD for some kind of infringement. They'd go to court for 6 months, and AMD would win the suit. And what happened though is the stock go up to about 22, and when it was at 22, we figured this out pretty quick because this was a cycle. Every time it got up, Intel would launch a lawsuit or file something against them, and the stock would go from 12 to 20, 22, back to 12. And you could, when it was 22, you just bought a whole bunch of puts and did put spreads and everything you could think of. And you do ratio spreads. And then when it got down to 12, you'd wait about 3 months. Okay, it looks like you look at a couple headline stories about the lawsuit, and then the next thing you know, you could go in there and buy them. Again, it was clockwork for a while there. There was a lot to be made just playing that little range. But obviously, AMD managed to get a real foothold there. But it's like all of this, all the chips, NVIDIA is really video card types, but even the processor guys, AMD and Intel, all of these things have been under pressure big time. And so
let me echo what Bob just said also. Before, we decided, okay, I want to lean toward buying Intel. The first thing I would do would check his charts in it and see where in the hell he was on the buy or sell, or where it was. There's no rush for me to buy it tomorrow. I want to know.
No, that's a good point. So my thought process.
That's how I use technical analysis. That's how I use technical analysis.
Well, so let me ask you. So if you are short Apple, so
I am short Apple.
Yeah, it means
short Apple.
And
I was hoping nobody said Apple.
Sorry, that's what's concerning me about the entire tech market. I just want to short it because if Apple is the heaviest weighted in the tech sector, how do any of these go up?
No. Apple on a if you use moving averages, it's the one that is just out of line. The others have already had the shit kicked out of them. Google, Amazon, Microsoft has not been beaten up. That's bad. Facebook has been beaten up. Those three are way the hell down. But Apple is still, if it breaks 130 where it's hovering right now, its next appointment is with 100. Yeah, I think, or 117. Bob, where's its next appointment if it clears this?
113. You also have the 200 week. I've gone a weekly. 13 is target one. Next target after that is a ridiculous number at $100. And then the extreme is 90, basically.
Well, I'm embarrassed. No, Bob. No, you're getting sensitive now. Yeah, I'm embarrassed to tell you where my GTC is on Apple.
75. That's where mine
is. Actually, more generous than that. But it's not the full load. But the GTC is at 90.
Okay, so you're trying to get back even. So we entered a short at 142.70 on Apple. So it's starting to work pretty good. Not as good as the Tesla trade, but this is pretty good.
I'll tell you what. That the deal is, I'm not only short Apple, and I'm short at 146.
Okay,
I've got puts on. I own puts. I'm in puts. The 145 and 150 puts for January 20th, which happens to be my birthday.
Okay.
I said, well, goddamn, I want to have a little birthday. I need some money for my birthday.
On right there.
Okay.
There's your Dom Perignon right there.
There it is.
Right there. Right now, I've got enough. There's some cases in there. We got to bring up the truck.
Well, but we'll have to pop one of those when I come out to visit you. So
we'll have it, son.
All right, guys. Thank you for bringing me up. This is a fantastic space.
Hey, if you haven't followed me, please follow me.
Oh, I will. I am both already.
No one follows me.
No, I follow you already. So,
all right.
Yes, thank you. Your stories are fun, and you bring such a wealth of just history to the whole. A lot of us who haven't been trading for all that long, we're having to learn this macro stuff from a freaking fire hose. So appreciate it.
Yeah. Well, I will tell you. Let me mention one thing to you. I asked my vice president, some people that are still at my former firm. I said, how are the traders? Do they have that long away stare? They said they do have that stare, Jim. Just when this generation has not seen this shit before.
That's exactly right.
And in our generation, we went through it a number of times.
Yeah.
Every time Henry Kaufman spoke, oh my God, Lord. Dr. Doom is speaking. Or every time Nixon spoke, or anytime that happens, oh my God. And then
Volcker days.
And then you didn't want to answer the phone. You don't want to make a call. You don't want to answer the phone. You just want to hide. and that's where they are. That's a large part of the financial markets. That's what they talk about. The liquidity's not there. A large number of players have gone catatonic because they're young, they're inexperienced. They don't have that. They need. I need to go back there and pat them on the back and say, "Attaboy, go get them some bitches."
Well, this was my university this year. I'll tell you that. I lost too much for sure.
Well, listen, we'll have Jim and I some more of these, and we'll get him into professor mode, and it's fun because we've had some conversations, and I love when I get him at in the teaching world.
Make sure you go read the article I just published on Seeking Alpha.
I will. You know,
it is one of my best. I actually think if I were to write it and I was the major professor, I would give whoever wrote it a doctorate degree. I would give myself another doctorate degree for writing that sucker.
I'll go check it out. And by the way, do you guys know that they're giving a premium special, like an all-time unheard of special?
Where?
Alpha?
Where?
Oh, no. Oh,
yeah.
Seeking Alpha.
Yeah, if you guys want to share that at all when you're talking about your article, because they are $30 a month, I believe, for subscription, and they're doing $40 for the year.
Wow. Really?
It's a bargain.
I might sign up.
I want to send me some of that damn money.
That's what I heard. I didn't read it myself, but I'm going to go sign up today if that's the case.
So just for the record, Jim's the only guy I read. I don't read other people's work, but keeps me who I am. Other than Jim, he's going to sign his book for me when I get out there. But
got to be selective on thing.
Yeah, listen, I always tell everybody, be careful.
Did you get your book? By the way, Bob, did you get your book?
I don't know. I'm in Texas.
You're in Texas. I sent you a hardbound book, my man.
Okay, well, thank you.
You got it.
It's hopefully in my mailbox at my office. That's the address I gave you. And what's funny about that is 2 weeks ago, somebody just took there's 3 offices at Strip I'm in, and somebody took that mailbox out, man. It just took it. I don't know if they were drinking or what happened, but they took our mailboxes out. I called people that own the building.
Well, if they trash my book, I'll send you another one.
So anyway, listen, Angela, appreciate your questions and participating. Shout out.
You guys are great.
Yeah, thank you. Shout out to Andy. You've been listening for hours, so if you're still awake, say hi to Dubai for me. Anyway, okay, folks, I'm going to end it this time. Now we're 3 hours and 34 minutes. Good. We're getting up there. So once again, Jim, thanks a lot for taking the time. This was really.
I really enjoyed it, Bob. Thank you so much for inviting me.
Yeah, every bit as much
fun.
Thank
you for finding this old man.
No, thank you for finding this old man. And one of these days, it'll be interesting. We'll get George on here because George and I have some pretty epic talks also.
Right.
We're gonna do a call with the 3 of us, and then we'll hook it up.
Anybody that studied at the University of Chicago under Friedman and all those boys is good with me because that's who I studied under, all his disciples.
Yeah,
and we always called him Uncle Milty. Uncle Milty.
I had an old buddy who passed away a few years ago, but he was in Milty's class, man. I was always so jealous of that.
Oh man.
I'm just like, dude, that's and he was a smart guy. This buddy of mine, and he has heart issues, and he's no longer here. But man,
Uncle Milty had there were some shortages. He gave a speech in St. Petersburg, Florida, the retirement community of the world, and he recommended doing away with Social Security. It wasn't one of his shining moments. Somebody told him afterwards, Milton, you got to understand, son, where they're coming from.
Exactly. All right. Well, hey, listen, that's a good note to end on, a Milton Friedman quote. So
good night.
Or about him anyway. All right.
Good night, folks. America, the world.
Yeah,
good night.
Thanks a lot. Appreciate everybody coming. Thanks a lot.
Take care. Take care.
Yeah. Everybody, see you later.